Hi, good evening all and welcome to another Money Space with me. My name is Kalu Aja and on here we're talking money, the economy and of course personal finance. Every Sunday, 8 p.m. West African time, that's what we're here doing. Thanks for joining. This week we want to talk real estate once our guest jumps in. And as we know, for a country like Nigeria with high levels of inflation, right? Real estate has been an outlet that has provided us with perhaps inflation hedged assets, right? So if the naira is losing purchasing power, lots of folks like to buy real estate, be it land or property or just earn from real estate, right? To sort of compensate or to hedge against the fall in the purchasing power of the naira. But are we doing it correctly? Are we buying the right properties? Are we buying in the right location? How should we approach the issue of credit in Nigeria if it exists? Are there mortgages in Nigeria? If you live abroad and want to get into real estate in Nigeria, how can you do that? That's what I want to explore this evening with my guest, Mr. Dr. Ronald. Once I'm able to have him request to speak, I'll just give him the mic and then we can just start off with asking him all those questions. He'll introduce himself to you. He's well versed and he's got a lot of knowledge in the Nigerian real estate space and he's just a perfect guy to talk to. So I see him here as a guest. Dr. Ronald, if you can request to speak or I've sent you an invite, then you can get on board and we can kick off the space. I'm just going to wait for you, sir. Request or accept my request to speak and then we can kick it off. Right. So guys, while we're waiting for Dr. Ronald, just a quick comment about last week. We were talking about the returns on real estate and the assets on real estate. Just good idea to talk about that before he comes on board. When we talk about real estate, right, there's the building and the land itself when you invest in it, right? Those asset prices, they go up and they beat inflation, right? Because as Naira loses value, you do get the price appreciation in your property, especially if it's in a good location. But guys, keep in mind what we were talking about last week, that the yield, which is the return from those properties, is not the same as the asset growth on those properties, right? So what we Nigerians, we tend to confuse the yield and the return on the assets, right? So we had a stock called through last week. You have to look at the property you have bought, how much you used to buy it, that's going to be your cost. How much is the property giving back to you in terms of rent? That's your income. With your income and your cost, right, and the present value, you can achieve your yield. So your yield tells you how much that property is really giving back to you in terms of return. And why do we use yield? We use yield because we can then compare yield across different asset classes. So if we want to compare, for instance, property with, say, shares, we can compare the cost of Zenith Bank with the cost of a house, or the return on Zenith Bank with the return on the house. Not really. We have to compare the yield, which takes into account how much we bought Zenith Bank and how much we bought our property, and then the rentals are compared to the dividends. So the dividend yield is compared to the rental yield, and then we can then say, okay, if we invest in stocks, perhaps through this company, it gives us a higher yield than if we invest in property. You've got to compare the yield, right? Not the appreciation in the value of the underlying assets. Is the yield that is your return? Yes, the asset value would remain, especially in a nation like Nigeria, where the property or the purchasing power is falling. That is offset by the rise in the asset value. So that's a quick point I want to put out there just to for us to understand before Doctor comes in, difference in yield and value. So yeah, just to get that out. And of course, I'm still looking at the doc. I see you here, sir. Gonna request to speak or accept my request to speak, and then we can have you in here and then we can speak. Yeah. Okay, so quick one. I see your DMs. They are very, very good questions, but I really wanted to have asked those questions when Doctor is online here. so that he can take them. I see a lot of you are writing from the diaspora and you're asking what are the good locations to invest in Nigeria, and is there a way that perhaps we can get a company that can what's it saying here? Invest in, is there a company in Nigeria that I can give money to that can build a house for me in the rural areas, things like that? Great questions that I'd like Doctor to come on board and answer. Stephen, how you doing, Mr. Stephen? What's happening? Thanks for joining us today. Mr. Stephen Ade, how you doing? I don't see Mr. Stephen. Stephen, go ahead. Rich team, how you doing? Rich team, how you doing, sir? Please go ahead. Doctor, I don't see your request, Doc. Maybe you should go leave the room, come back in, and then do a request, Doc. Leave the room, come back in and do a request. Then I can see you. All right. So I'm just waiting for Doctor, I guess, to hop on board. Dr. Ronald, who's going to talk to us about real estate opportunities in Nigeria. Rich 10, did you have a comment before Doctor jumped on board? All right, guys. Hey, I hope you guys can hear me. I hope it's not my setup that's the problem. If you can hear me, give me a thumbs up. Okay, Doc says he has requested, but I am yet to see him. Doc, I've sent you numerous invites, and I'm going to send you a request to speak again. Go out, come back in again. Thanks, Tomiwa. Yeah, so he can hear me. Right, go out, Doc, then come back in again and do a request, and then we can grab you. I got lots of great questions here, Doc, and lots of folks who really want to talk about real estate investments in Nigeria. So, really would like to have you hop on board so that we can basically get going, Doc. So just give me a second, Doc. Yeah, you're back. I'm going to send you a request again, Doc, and then see if you can hop in. There we go. I see you, so now request, Doc. Okay, seems we're having technical challenges, guys. So, I'm not sure what's going on. I could shut the space and start again, Doc, but I've got guys here. Let me see if I can ask someone else and then see if they can request. Otherwise, I'll shut the space and just restart real quickly. Black Hermit, can you hear me and can you speak? You're my test case, sir.
Yes, good evening. I can hear you, and I just want to register my presence here. I'm a real estate developer and investor in Abuja, and I would like to be a contributor on this platform. Thank you.
Thank you, Black Hermit. I'd like to get Doc in, so perhaps hang in there from the Abuja wing. We might have questions for you. But question for you, Black Hermit. If I were to build a 3-bedroom house, is it duplex or apartment in, say, off location in Abuja, what would that cost me now?
Okay, let me understand you properly. Assuming you have a plot of land already, and you are thinking of building a 3-bedroom, if it is bungalow, is a lot cheaper, and if it is a duplex, is a different ballgame. So, can you just come up with a location, preferably maybe one of the outskirts?
Gwagwalada, maybe like around Gwagwalada. No, I know it to be too expensive to get something near town. Maybe Gwagwalada, maybe.
Okay, Gwagwalada is really like a far outskirts, and to build a bungalow in Gwagwalada, depending on the location, I know a plot of land in Gwagwalada can go for like the ones that I have ideas of. Like if it's a full plot of land, like independent land that is standalone, like on its own, it could cost you between 3 to 8 million naira, depending on the location. I think the ones that are in buildable areas are around 5-7 million to 8 million.
To build it, that's without the land, just to build it without
a plot of land.
Oh, to buy the land is 3 to 7 million.
I'm telling you, the ones that are in a buildable area, like in an area where you can build and live with neighbors around you, you could be thinking of something within 5 million towards 8 million naira.
Oh, interesting.
With good title. That is 1,000 square meter, but it could be lower. Like maybe if you are going to a new areas where you might have like few houses around you. You think about maybe from 3 million to 5 million.
So interesting. And what title will I get? Will I get the title from the FCDA? Who gives me title?
Most of the titles in Gwagwalada are area council, but if you are investing, make sure that it is recertified.
What does that mean?
Recertified is that let it be like an old title that have been registered with FCDA. Now you can go to Aegis to do your search. If you are buying from anyone that is telling you go to area council to do your search and it has not been uploaded to database with Aegis yet, run away from such investment.
So let me understand what you're saying. So if I go and buy that 5 million that land, I'll get the title from who?
Okay, most of the land that are available in Gwagwalada now, area council have not been allowed to do any new layout, to design any new layout, or give out any new allocation paper. If you are buying any land in an area council, not just Gwagwalada, if you are buying in under AMAC, which is the most fraudulent or issue-prone titles in Abuja, if you are buying from AMAC, Gwagwalada, Kuje, or Buhari, or any of the area councils that you are investing in, make sure that it has been registered with Aegis and do a very thorough search. They might not be able to give you an official search for the property, but try to make sure you do a very thorough search, what they call window search, but not just rely on the window search. Try to get an insider that will do a very thorough search for you.
And what's Aegis?
Sure that you have a property that has no issue.
What's Aegis? Just for folks that are not following, what's Aegis?
Aegis means Abuja Geographical Information System. That is AGIS.
Okay.
Abuja Geographical Information System. It has the database of every single plot of land in Abuja that are genuine. And the reason why you need, sir?
Go ahead.
And the reason why you need to go with Aegis is because if you assuming you have an investment, you are investing in a property in Abuja, and there is an issue in court tomorrow, the only agency, the only body that the court will be obliged to write to for verification, or police or anybody that will be required to write to for verification, is the Aegis. They don't write to area council because they don't do any business. Area council, as Abuja is now, have no power or whatsoever over anything land matter.
Okay, just so we're following, right? So I can buy the land from area council, but I have to make sure it is Aegis certified.
Yes, they call it recertification.
So I know. So would they give me like a C of O? What would they give? How do I know it's recertified? Would I get like a paper, or how do I know?
Okay, from whoever that you are buying the land from, make sure that the person have all the documents in place. Even if he doesn't have the recertification paper present with him, they might tell you it has an issue or something. But make sure that the person have all the papers in place.
Gotcha.
Then you get a lawyer, a good lawyer that understands property and how property works, that have been into property business, because it's not even every lawyer that you run to. In most cases for land issues, some lawyers will be so busy they might not be able to. They don't have contact within the land registry system, and since it is area council, you might not be able to. The office will not be writing a report to you that this is the status of the land or this and that. But if you have somebody that is an insider with Aegis, if you know somebody that should have an insider with Aegis, probably people that are into property business or a lawyer, beg them to do this search for you, but not make sure that they are not the ones that you are buying from. They must come in as neutral party. Tell them to handle the search for you. They will give it to their contact in Aegis that will do a proper verification system. That will go through the proper verification. That will go through the proper verification that will be able to tell you the history of that land and everything. If there have been an issue on the land before or anything, they'll
Gotcha.
tell you all those details.
Okay, gotcha. So let me ask you the question I asked at the very top, right? So if I got this land and I wanted to build a 3 bedroom, maybe flat or duplex in Abuja, what would be the cost to build that property on that my 5 million naira land in Abuja today? Do you have an idea?
Okay, yes, I have an idea, but when it comes to construction, it also depends on the kind of quality you want to give to finishing. And I'll give you a brief analysis of how to go about the calculation. For instance, if you have a mind to go into a 3 bedroom, let's say a bungalow in Abuja in an outskirts, although they don't give the government control doesn't give approval for bungalows anymore. It has to be a duplex or a block of flats. They don't give approval for bungalow.
Wait, hold on. Okay. No more bungalow in Abuja.
They don't give approval for bungalow anymore. It's part of the policy that there's no enough land. They're expecting that the pace Abuja is growing, there might be no enough land. So giving people approval for bungalow is more of like wasting space. So if you have civil servants that are earning very low, you approve the government control as a developer, they'll tell you build block of flat for them.
Okay.
The persons can have their apartment.
Okay.
And for people that are comfortable, like the middle class, or though they're not really there that much anymore, the middle class and the upper class is duplex.
So what you're saying is I have to build like a duplex or a block of flats, more or less, in Abuja. I can't get a single owned bungalow anymore in Abuja.
You can get a duplex now. For instance, let me give you how to do the calculation for duplex.
Go ahead.
How to know the cost of a duplex in Abuja. For instance, if you want to go know the cost of a duplex in Abuja, you ask yourself the number of apartments you are building. If you are building a duplex, though it depends on the size and some other technical issues and the locations, if it is waterlogged area or if it is a rocky area or anything, that depends on the kind of foundations you'll be putting on ground and so many other factors. But assuming you have the land in place and everything, give and take about 7,000 blocks will deliver a 4-bedroom duplex for you. So you first of all multiply the price of blocks by 7,000 to know what the exact amount you'll be spending.
But I don't.
On block work.
I hear you, but give us like a ballpark figure. And somebody's asking if you can list the documents you need for ages. Somebody's asking that question. Like, can you list the specific documents for ages? But give us a ballpark figure. Just so we have an idea. Just for our budget. How much should I budget if I want to do a 3-bedroom?
A breakdown of everything. A 3-bedroom duplex in Abuja, from beginning down to finishing, I think 25 million naira will take care of it with this present day inflation. Before now, it used to be around 18, maybe 19, but with this inflation, I think 25 million naira will take care of everything.
25 million.
25 million naira will give you a very solid wall, sir.
So that's going to be land about 5 million, building about 25 million, about 30 million, give or take. I'm a landowner in Abuja.
Okay, now what I mean by 25 million is that you are giving it like a befitting finishing, like it will be like a key to hand, like you are moving in.
Gotcha.
I excluded land at the point of this conversation. If you have your land in place, because land have to do with a lot of there are a lot of things that come into land and getting approval.
I hear you.
Yes.
Okay.
So you have to get an architect to give you a design and approve and everything. That is what added up to the 25 million and the approval and the design.
Okay, so last question for you. I want to ask Wale a question, but last question for you, Black, right? If I build this house, so all in, I'm talking about 30 million, right? All in. What is the rent? If I had to rent that building out in Abuja, what am I looking at per year for that building in Abuja?
Okay, assuming the 3-bedroom is in areas like let's say outskirts, Karu, Nyanya is their outskirts, Kubwa outskirts of Abuja, and areas like that. If it is in the outskirts, you can be rest assured that if it is places like maybe Karu, for instance, you can be rest assured that you have people that will be willing to pay up to 4 million naira rent
a year
for some. Yes.
1
If it is
year.
in places like Ubwa, I think you get it within the same range too. But if it is in places like Guzape, you see people desperately begging you to pay you maybe 5 million, 7 million.
Wow.
And if it is in places like Gwagwalada, you struggle to get a tenant that will pay more than 2 million.
Okay, so in effect, if I spent 30 million on the house and I rented the house out for the 4 million, that's about a 13% yield. 13% yield. If I that's 13%. Zenith Bank is doing about 9%. And I won't have Wahala. But it's good to have all the information. Just hold on there, okay? Black. I'm sure we'll need you. Just hold on there, sir. And Black, just if you can help us, somebody's asking you to list the documents that we need to get that property in Abuja. So if you can get that ready for me, I'll call you back. But let me just get, because Wale wanted to speak, so I got Wale and Ken. Wale, what's on your mind?
Hey, Kalu, thanks for always hosting this space and all the word of God you share every Sunday. Really
Thank you, sir.
appreciate that. I'm a Nigerian in diaspora, and I'm just curious to see that are there any established companies yet who can provide housing based on the mortgage system that we have back here, right? I know Prop Crowdy, which I see.
Yeah.
Roland is from Prop Crowdy, right?
Yeah.
They talk about investing, right?
Yeah.
For them to build houses, you invest in that. But what about, is there a possibility that someone can invest and still be like a buyer of the said property that they want to fund, something like that, right?
Yeah, Prop Crowdy was actually our guest. I'm saddened he's not able to log in. I see the handle and Dr. Ronald. If he's able to come in, then we can basically ask him those questions. But in Nigeria, really, Wale, for Nigeria as a whole, we really don't have a mortgage scheme per se. We have, apart from the housing scheme, the Nigerian National Housing Fund, we really don't have a real housing mortgage loan system in Nigeria where you can get a mortgage for like 30, 25 years like you have in the West. We have National Housing Fund, but not a lot of people get it. I personally applied for the Nigerian Housing Fund in 2008, 2009. Till today, I don't know what happened to it. I myself personally applied. I don't know where it is and all that. So, but the pension industry in Nigeria now, they have allowed them to use 25% of your pension accumulation towards paying down for a mortgage. What we have in Nigeria are really bank loans to buy a house. So you're going to be a 5-year or a 6-year or whatever. So you get a bank loan and you buy your mortgage. But the banks don't have an off-taker. They don't have like a refinance company that they can sell that mortgage to. And because if they were able to do that, you see that then the mortgage will become faster, cheaper, and more spread out, right? So that's your first question. That it's difficult to have a mortgage system in Nigeria without a refinance company and also without credit. We just like having credit scoring in Nigeria. So I don't think it's that widespread that someone can pull up your credit and give you a loan based on that. It's more of income-based loans from a bank to buy a property. That's really what we have, Wale. And I think there are other firms. Prop Crowdy is one, UPDC is two. There are many companies in Nigeria that you can buy properties through them that build and sell. Many of them. It's a large one in Lagos, what the name escapes me. But I think the problem is really that it's one and few. It's not like a system like you have in the US where you can do off plan and it will be delivered in a certain amount of time. It's really, you are looking for gems in a big pile of quote unquote garbage. There are a few gems in there that could deliver. In Abuja, there's Brains and Hammer. There are a few guys I know over there as well. But you are searching for these guys. It's not like it's standard. There's no standardized material or standardized designs or finance rules or mortgage finance rules like that in the country. That's where your problem's going to be, Wale.
Yeah, thanks for that. That was very helpful. And I totally agree with you because I've been on this journey for a few right now, right? Even the Brains and Hammer guys you mentioned just now. But the problem is we hear of certain plans and we never see the fruition of it. The Nigerian, what's this applicatory commission?
Diaspora Commission.
The Diaspora Commission for the last 1 year or so has claimed that they want to launch some mortgage funding for diasporans. So the website launched We put in our details. We never heard anything back.
Yeah, that's not going to fly. Mortgage is an issue of credit and long-term savings. So right now in Nigeria, we couldn't have a mortgage because we didn't have long-term savings. Now we do. The pension fund industry in Nigeria, I think, is about 18 trillion that they have or so in their reserves, in their contributions in assets, right? They have that long-term savings. So it is possible for Nigerians to then get loans for 20, 30 years, not from the banks, but from bonds that the pension fund administrators would buy. So if you had a large scale, should we say, developer, there is a process where you can do an infrastructure bond or a mortgage-backed security or a real estate investment trust that the PFAs will buy in. That's the pathway. You've got to go for long-term funds so that when you build a house, like you saw Abuja guys telling us about a house going to be built for 25 billion. It's a lot to a civil servant, but if you take 25 million over 20 years, that's 1 million a year. So it becomes affordable, which is the same thing we have in the States, right? You spread out the payments so that the cost of the homes falls and more people can afford it and then create an industry around it. So it's refinance, it's credit, long-term credit. And then, of course, it's the building materials around that whole idea. Because you can't have affordable homes when cement is 5,000 a bag, or nails, or roofing sheets, or paint. So it's a lot. It's really an opportunity that Nigeria is letting to go. And I'm surprised why they are letting it, not really focusing on that. If you get housing right, you create millions of jobs, millions, and you change the demographics and how people invest money in the country. But it's something that we have to work on. One ministry can't wake up and say diaspora bonds. It's a waste of time. Yeah, waste of time, Wale.
Yes, sir.
All right, thanks. Hey, Ken. Doc, I see your screenshot. I see what you're saying, but I don't see you on that. I'm not really sure what can happen. You once you come in, send me the DM of who we're going to log you in, and I'll just put you on. So I think it's maybe an issue with your connection. I'm not sure, because if those other guys are able to log in, Doc, so just work with me. I can see your DMs. Once you can get in, let me know and I'll add you, sir. Hey, Ken, you want to say something, Ken?
Yeah. Good evening, Carl. Good evening, everyone on this space. It's the topic today is critical. It's critical for a country like ours that we've not really tapped into the value of real estate in Nigeria.
Yeah.
In fact, the biggest real estate that we have is agricultural land that we've not even tapped into. I think the last figure from PwC put it at about $900 billion in terms of if you want to value it and actually put lands in the hands of people. And when the first speaker was saying something about you asked a very important question regarding investing in real estate as of today in Nigeria. Yeah, maybe the figures he mentioned would have worked maybe like 2 years ago, 3 years ago, yes. But right now, those figures that figure cannot work anymore.
So you're saying I can't build a 25 million naira 3-bedroom duplex flat, whatever, anywhere in the FCT or outlying areas?
No, you can't.
Wow.
With the prices of materials now. In fact, just this week alone, Dangote increased the price of cement to 6,700.
What?
From 5,005 last week. I mean, that's the jump, and you know how the prices of cement increase in Nigeria. It is tied to the dollar. Whenever there is a sort of devaluation or exchange rate hike in Nigeria, just watch straight, the price of cement will go up, and once the price of cement goes up, price of every other building material goes up.
But Ken, why does the price of cement go up when dollar goes up? I mean, the only thing the guy gets his the raw materials here. They import gypsum, right? But the power is from Nigeria. The limestone is from Nigeria. They only import. So why is the price tied to dollar?
The man knows that his wealth is tied to cement. So the only way to stay on top of the charts, if you know what I mean, on top of the charts, is to ensure that he maintains that valuation. And that valuation is priceless to him. I heard him once on the interview, one interview, I think from Al Jazeera, where he mentioned that he was he's the kind of person that doesn't joke with that valuation, that Forbes valuation and all that. He likes to be at the top. So whenever that happens, the man always goes ahead to increase the prices, whether we like it or not.
Okay, let me push back on that, Ken. What about Bua Cement? Is Bua Cement or WAPCO? WAPCO is a corporation. Have they increased the price of their own cement, WAPCO and Bua?
Bua and others, they are at the mercy of Dangote. Dangote controls the price of that product in the market. So whenever the price shoots up, it's an opportunity for Bua and the smaller guys to also push up and try to make a margin of this too. So that's the game. That's how it has been for years. It has always been like that. It has never changed. They recognize the power of such monopolies that can make a decision today and then take them out of business. That's happened before in the past. So they play with him. They play with him. Some months back, Bua came out. Rabi came out to say something about price of cement going down to 3,005. But when you look at it deep down, you discover that 3,005 you mentioned was not the price at the market. People were jubilating there, thinking that price of cement will now be 35. Let's see what Dangote will do now. But the man was being clever. What he did was putting out 35. But the 35 is if you go with your truck to his factory to buy. That's when you get the 35. So, but bringing it to the market, the price still gets back to 5,000 naira range.
Yeah.
That it has been at for a very long time now. So, it jumped up to 5,005 when dollar crossed 1,000.
Yeah.
And then recently when dollar went up to almost 1.5, the thing jumped from 5.5 to 6.7. So
yeah.
Real estate, to be honest, Carlo, I'm telling you, because I have information in this sector and I know people who work in this sector, and as a structural engineer, I also work in this sector. So it's unrealistic. Developers are in big trouble because they sold properties in 2021, 2020. Those of them that have not been able to deliver or up till now, they're in big trouble. They can't even muster the funds to deliver those properties anymore.
So Ken,
yeah.
Question for you before I go move on, right? I just want to keep you on space as well. What is the if I want to build a house in Nigeria, what's the number one, the highest cost, if that's the right word? What is the number one or number two cost that basically make this house 25 million? What's the one and two?
Well, in terms of materials, the first one that I would say is the most expensive is your reinforcement rods.
The steel, the rods.
Those are really, the rods are really expensive, especially if you want to do it the right way. People cut corners. Maybe that's where the 25 million is coming from. That's how you get houses that collapse while people are living inside. Because people who cut corners, they buy really, really cheap reinforcement rods.
Black, don't worry. Black, I'll give you a chance to. I'll give you a chance to respond. Sorry, Black, I'll give you a chance to respond, but I just want to get from Ken and I'll come back to you back. So Ken, you said the rods are the number one cost issue to build a home in Nigeria. What else?
Yes. Yeah, the next one is cement. Of course, cement is in fact the truth of the matter, what keeps the house standing is the concrete and reinforcement rods. So the rods are really expensive. If you want to buy very good ones, TNT ones, those ones are very expensive. And after that, then you talk about the concrete itself. So the concrete is a mixture of the cement, the granite. Granite, I would say, is the next most expensive, very expensive. Yeah. And then the sand is sourced locally too. So those, in that order, you have them in terms of how much you spend.
Are the iron rods imported?
No, we have rods being made in Nigeria.
So rods are made in Nigeria.
Yes.
Cement is made in Nigeria because Jakarta makes rods. Rods are made in Nigeria. Cement is made in Nigeria.
Yes.
Sand is in Nigeria. Yet homes are expensive. Okay.
That's the problem when you have a dollarized economy, my brother. The economy is dollarized. So, as from what we can see, I still saw a circular from the CBN So they're going after people, organizations that are collecting school fees or so.
A new secular or a new secular
services in dollar. The truth of the matter is that the country, the economy is dollarized to the point that even those who collect in naira, the moment they watch the price, the exchange rates go up, they increase their price. Because yes, you make some of these things in Nigeria, but there are some components you still import.
Gotcha.
Those guys that make all those cables, Nigerian cable, electric cable, they are just the best. If you want to build your house, just go for Nigerian cable. Don't even bother buying imported cables. No need. But these guys, when you go, I've been to Coleman's factory once, and when you see the components, what they import in terms of raw materials into the country to be able to get the products on the market, you will understand the volume of forex that they require to even do that local production. So the same thing goes with these reinforcement rod manufacturers and producers in Nigeria too. So there's still that thing. But if you talk about someone like Dangote, yes, you're right. I mean, which of the components is coming from abroad? Zero. None is coming from abroad. So why should the price of cement go up exponentially just like that?
All right, Ken, hang in there for us. Let me just quickly get Black Hermit. Just a quick one, Black Hermit. So Ken says you can't build a house for 25 million. Just a very, very quick and all that. Do you have a comment on that before we move on to Chinedum and Timmy? Okay.
All right. Good evening. Mr. Ken, I think I understand you very well, and I understand your knowledge of the industry. I cannot say you are very wrong. Because a lot of things can be depends on the approach one takes. For instance, I'm a builder in Abuja, and I have experience about project management. And when it comes to doing stuff like this, I rely more on direct labor. I have sons that can get rod. I don't go to the factory.
No, Black. We're not trying to say just to, if you had any clarifications, do you agree with him that 25 million can build a building, or do you still think it can build a building that is quote unquote workable? Just
25 million naira will comfortably deliver a 3-bedroom duplex for you, and a very solid one. I could give you a breakdown.
Send it to me. Send me DM, right? So I'll bring it back to the form. Send me a DM on all those materials. I'll bring it back. Yeah. Let me get OB. Thank you so much, Black. Chidubem _ honor. Chidubem honor. Real quick. Go ahead, sir.
Hi, Carol.
How you doing?
Thank you very much
for
what you do. Yeah. So I was also surprised at Blacksmith's price, because I had developed a property last year, and man, that shit is something.
Where did you build it? Where?
No, it was just a property in the village.
Oh, okay. So that's okay. How much? What was it? How many bedrooms?
It's like a duplex. So, and man, it's crazy. The thing is, I don't know, maybe for the guys who are professional, but if you really want to do a quality job, because a friend of mine had also built 4-bed, and I'm sure it took more than 30 million. That was a bungalow.
So 4-bed bungalow, 30 million.
Yeah, it was more than 30 million.
Yours was how many bedrooms? Yours was how many bedrooms?
It was 6.
6. How much did it cost you?
That was a lot.
You don't want to give us a figure.
Yeah, but
I hear you. What was higher than 30 million?
For duplexes.
Okay, let me ask you a question. How did you finance it? Was it your own personal savings? Did you get any bank loan? Just I want to know if it's your money or you borrowed money.
Yeah, no, it was savings.
All savings.
So,
did you try to go to a bank, or it was just that you had the savings? Why didn't you go to a bank?
Didn't really, first of all, to be honest, didn't really understand how the whole bank financing thing in Nigeria works. And it also one of the questions why, because I've had a lot of people telling me about real estate and how real estate investment like makes a lot of sense in Nigeria. But one of the questions which I needed to probably ask you or Black Hermit was in the light of this whole currency depreciation, like how somebody who is investing with foreign exchange can still have a positive business case. Just for instance, I knew like there were some properties which I had gotten last year, and this were say when dollar was around 650 or something, and then I'm just thinking about like if I had converted those dollars right now, the what it would be, and how that would still be a business case like in the Nigerian situation. So I really wanted to ask like the guys, for someone who is venturing into real estate with like pumping in money from outside of the country and from a purely business perspective.
I hear you. It's
really be the right business model.
It's a great question, but let me ask you my final question. I'm going to try to answer. It's a great question, but this house you built in Enugu, are you going to live in it? Are you going to rent it out? Is it in your village? Just a question for you.
It's a village house.
Wow.
It's a country home, more or less.
So I mean, so the yield is more or less, and I mean,
it wasn't from
gotcha.
There was no economics involved in it.
It was
okay. Just totally from a cultural.
I hear you. I hear you. Okay, thanks for answering my question. So let me just last week we had the pastor on the Chartered Institute of Stockbrokers, and someone had asked him, "What if I'm investing in Nigerian stocks with dollars? You know, and now I'm buying naira. Is this still a good investment to do?" And he answered this way. He said, "If you are doing dollar to naira to invest in Nigeria, the question is, do you want to take the money out or do you want to keep the money in? If you are doing dollar naira to invest in Nigeria, keep the money in Nigeria, earn naira returns and move on, it's a very, very good investment because you are going to get more naira per dollar, and of course then your cost is lower because you are coming in with that capital. The problem is if you want to invest in Nigeria and then take dollars and go out again. If you are trying to do that, that's where you don't have that exchange risk. And if you are taking the money out, it's not a good idea. If you're going to take the money out, because even if you could buy the dollar, could you then get the dollar to even get out? So that's how he answered it. And I think that was completely correct. Even if you got it, could you then take it out? That was how he answered it. So, Chidum, thanks for the question. Hey guys, I see all your questions. You're welcome. I see your questions. Yeah, great. But I've got Dr. Ronald here now, and I hope he can speak. So I'm just going to move on to him. I see your hands, Timmy. I'll get you to speak. Let's get Ronald to introduce himself, and then we can ask him these questions. He's more of a real estate expert, and he can basically take those questions himself. Doctor, are you able to unmute and say hello? Doc, I see you as the co-host, so if you can unmute and say hello, we'll be glad to hear you. There you go. Doc, you're unmuted, so go ahead. Good afternoon. Doc, if you can, I'm going to just get Timmy real quick. Timmy Ajayi, how you doing?
Hi, hello, I'm doing great.
Great, what's happening, man? I can hear you, yes.
Awesome. Yeah, very interesting conversation, to be honest. Conversations like this, we need to have them. So, my name is Timmy. I'm a property developer and I also co-founded a prop tech company. Right. And from my experience as a property developer, I'm building right now. So, in all of the madness, we are right in the middle of it. So, 25 million to build. I feel there are a couple of questions to ask. With saying we want to build 25 million, it means you have your land. I'm assuming that.
Yes,
right?
he has his land, yes.
Cost of land is out of it.
Correct.
Right? If cost of land is out of it, there are also a couple of different scenarios to look at. I would advise, okay, you want to have 25 million, you should probably be looking at a bungalow, because from my experience in construction, the more suspended floor slabs you have, the more expensive your construction is. Like what people call deckings, basically. So those are like part of the things that are really expensive when it comes to, the building frame, the carcass, right? So that's where you have to use a lot of reinforcement, right? And I can tell you as of today, 1 ton of reinforcement TMT, right? That's like one of the top quality ones. Is selling for 640,000 naira. Today's price. It might not be tomorrow's price, to be honest. Right? So if what you have is 25 million, I think a bungalow is relatively affordable if you have your land already. And another thing I would also say is, if you have that 25 million sitting in the bank right now, it is achievable. But if what you are saying is, I want to build this house over a 12-month period, this 25 million is coming in tranches, then I can't say for sure. So, and the reason for that is, if you have your 25 million in the bank right now, you have your land already. What you just need is, say, maybe you are just getting the approvals. Once you have that, what you can do is you can deploy funds. So if today you get your bill of quantities and what you are saying a total of, say, 26, 27 million, you can pay cement vendor, you can pay for iron rods, you can pay for your tiles, you can pay for roofing sheets. Lock down those things, right? And then what you just know that is you are paying for, labor on site. Then it's quite realistic if you are building a bungalow. So if you are saying, okay, the total I want to spend is 25 million, but this money is coming small. So I'll do foundation today, maybe 2 months later, we do, the columns and stuff. You might end up spending 40 million. So because by the time you come back to site, go ahead, please.
No, sorry, don't want to interrupt you. So what I hear you saying is that the speed or the availability of financing is really very, very key for you, because if you have all the funds, you can actually pre-buy these materials. Okay, exactly. Is that a big deal? I mean, is it a deal breaker? Like, if I don't,
it's a very big deal. I will tell you, because of the fluctuation in prices. So I will tell you, for example, I'm a developer, right? We are currently building apartments in Surulere, just 2 suspended floors, and we have done over 70 million. And what we are building are just 8 units of 1-bedroom apartments.
Sorry, take that again, please. Just take that again. What are you building?
1-bedroom apartment, 8 units of that.
Okay. And you spent 70 million without the land.
We don't over 70. Right? And, so if I just oppose that, that's like, say a typical duplex, say 5-6 bedroom duplex, right? If it was to be a private home, right? And so if you are thinking of a duplex and what you have 25 million, it might not be very realistic, right?
How much is your 1 bedroom?
What you have to look at is, what quality of finishes are you looking at? One of the things that also takes a lot of money is the type of finishes that you want to use. So if you want to do standard or in quote basic finishes, maybe for a duplex, right? But the thing about it is, if a developer should do that for like a client or doing it to sell, it will be that developer is giving subpar quality. But if you are doing it to say that, okay, this is what I can afford, using local tiles, use this and use that, I'm okay with it, then maybe. Okay. But as a developer, you can't do that because it doesn't give you a good name in the industry, because you are seen as someone who is delivering subpar stuff.
I hear you. So, real question: for your 1-bedroom flats, where are they located?
Surulere.
Okay, how much are you, is it for sale, outright sale?
Okay, so what we did wasn't outright sale. What we did is long lease, right? So people can long lease those apartments, and then they get rental income on those apartments over a period of 15 years.
Okay, so let me just understand. I come to you, I quote unquote lease it from you, then I own it, quote unquote. Then I get the income from that lease from you.
Exactly.
For how long?
15 years.
15. Yes. What's the average return on this guy?
So the average return is say 4 million per annum. And what we did is, we are not doing fractional rental. right? So if you're going to traditional rental where you're collecting rent per annum, or just once, right? Typical rental for one bedroom apartment in that location is off Adeniro Bosoya in Surulere, right? And traditional rentals for one bedroom is about between 1.5 and 2 million naira, right? Max you can do is 2.5, which is a bit steep, right? But with high yield rentals, so we're doing a mix of monthly rentals and Airbnb. And with that, you can make up to even 5 or 6 million. But using conservative figures, we're saying 4 million naira per annum.
So what's my ticket to get in? If I want to get into the, what's my ticket? How much do I have to pay to buy this lease?
So you're paying 15 million.
Whoa.
Right? So hypothetically say 1 year lease of 1 million. But the idea is that people make their money back, tops 4 or 5 years.
So let me understand what you're saying. If I walk into your office today, how much do I pay to lease this one bedroom?
15 million.
And I get 4 million back
every year.
Wow. So that's about, we're talking about a 26% yield.
Exactly. And it's only it's that way because number one, it's a lease, right? Because if you were to buy outrightly, a one bedroom apartment typically sells for about 30 million. We're selling, right? We're selling outright, so about 30, even 40 million, right? But because this is a lease, it's lower your the
Gotcha.
entry.
So Timmy, I could argue that because I don't own the underlying property, it's actually just a bond. This is a 15-year bond. Pay me 26%. I could make that argument.
Exactly.
It's not bad. I mean, it's not bad. The inflation is 30. This is 26. This beats everything I've seen. I don't have to worry about cleaning. Who does the maintenance? You guys do it?
So yeah, we do full facility management.
So I just give you guys the money. I get my. Is it guaranteed? You guys will pay my account if I'm abroad. You guys just give me my money at home.
That's the way. So the truth is, if a large percentage of people who bought units in the building are people living abroad, right? So we simply manage for them, give them quarterly reports, and then they're getting their returns paid to their, specified accounts.
Interesting.
Right?
Very interesting concept. Hang on, Doc. So, guys, again, I'm seeing Doctor. Doctor is coming on as a speaker, then he falls off. So, I find it difficult to get him here. Doc, I see you coming and then you hop up. That's why I'm not really called you to speak. But once I see you, I don't want to interrupt anyone who is speaking. But I see you start coming in and out. Timmy, just hang in there. I'm sure folks might have questions for you when I go back to DM. Let me get. I think I've got Big E. Big E, please go ahead. Timmy, thanks so much. Just hang up for us. Yeah, Timmy, Biggie, go ahead. Biggie.
Thank you.
Yeah.
Yes.
Real quick. Yeah.
Can you hear me, Mr.?
I can hear you, sir. Go ahead.
Yes, thank you so much for this space. This is one space I don't like to miss. Actually, mine is a question around the first person that spoke.
Black. Let me. I think he's here. Yeah. Go ahead.
Yeah, when he talked about yield about 25 million or so. So I wanted to know where exactly For instance, when going to JV, joint venture, I have a land and probably I'm looking for someone who are going to do joint JV. What's actually the return like? What's the risk and what are the opportunities around this? Preferably around Abuja or even Benue State.
So what are you asking of? You're asking if you want to do this, what would be the return? What's the question so we can clear?
The question is for JV
joint venture.
I have. I'm probably looking to run the investment with someone and we do a return around this. What's the like?
They will build for you. Is that what you're saying?
Yes, exactly. The yield and also the risk.
I think the yield is going to be the rentals in that location, right? So if you know the rentals in that location, you divide it by the cost of you building. That's going to be your yield. So if you have a cost of building that property for 30 million and your rent is 3 million, that's 10, right? That's what you're looking at. The return, i.e. the rental, divided by the cost is going to be your yield.
And what's the risk like?
The risk is that you don't build it or you don't get the rental. I mean, the key risk for us is that you don't get that rental. So you have a low return on asset and a low return on investment. So imagine if you borrowed that money. You know, the other guy that spoke, I think it was Chidubem that spoke, that Chidubem used his money from his own savings. So Chidubem has no issue with cost of capital. So he has no cost of capital issue. But if you borrow to do a JV and you cannot then meet the necessary returns to pay back the bank, then you have a dead capital. It's real estate is capital, but it's dead because it's not earning you anything. That's the risk really for you. So the experts here are telling you location. The guy that just spoke, Timmy, this is what they do. So they know where to go get the place and build it and all that. But I don't know where to build. I don't know anything about location. So I would prefer to just go to an expert and say, I have this amount of money. Where should I invest? What will be the return? Would you guarantee me that return? What papers do we sign? That's how I would approach it. So that way I'm covered. Because I don't want to do what I don't know. If you ask me about shares and stocks and bonds, I'll answer you. But property, go to the experts, find out from them where you should build. It's very important you go with expert advice.
Can I add something to that?
Sure.
Okay, so for BE, right, if I get your question well, you own a land, right, and you are looking to go into a joint venture. If I'll be correct, that means you are looking to go into a joint venture with a developer that will develop that land, and you then are getting returns. So there are ways where in joint venture, partnerships, they take different shapes and forms. But a typical joint venture is that, say you have a 1,000 square meter land, right? That's bigger than a typical plot. And then you have this developer coming to say, we will deploy the funds, the professionals, everything to build this land. What usually happens in that case is that there will be a sharing formula, right? Which is, usually based on the value of the land that you are bringing into that joint venture agreement. So you have a land, I think you mentioned, is it Benin or where?
Is that Abuja? Abuja.
Oh, okay, Abuja. So it's going to be a function of the value of your land. And then based on that, we agree on what will be a sharing formula. So an example can be a 60-40 sharing formula. So it means that if we build 10 units of apartments on that land, 6 units of those apartments will be owned by the developer, while 4 of that will be owned by you, the landowner, upon completion. You can then decide as the landowner to either sell your own units or decide to hold on to them and rent them out. Or you can decide to sell some of them and hold on to some for rental income. But typically for me as a developer, I want to sell and move to the next project. But going into that partnership, we need to also make sure that the numbers make sense. So if you're coming with, say, a land value at maybe 200 million, if your land is valued at say 200 million, if what we're going to deploy to build that land is say in the excess of 300 million, you know that we can't do a 50-50 sharing formula. So we're going to be looking in the 60-40 region. Sometimes even people do 65-35, 70-30. Depending on what I'm going to be deploying to develop that place as a developer, right? But all these things are open. Sometimes even the developer, in fact, most times the developer does an independent valuation of your land, right? So it doesn't look like they're trying to undervalue your land. So they bring in a valuer, they value that land, and then they bring you the valuation that the valuer has advised. And then, of course, you as the landowner, you have a value in mind for your land. Sometimes those values might be emotional, right? So we need to also use proper valuation to then come to a middle ground. So if you are saying my land is valued at 250 million, and then we bring in an independent valuer that says this land is 180 million, and then we come to an agreement to say, let's leave this thing at 200 million. So we agree that your land value is 200 million. And then by the time we did, our own designs and everything, what it would take to build that place is maybe 350 million. Then we don't use that to agree on what would be the sharing formula of how many units will be owned by you, how many units will be owned by the developer, your own unit, you can then decide what you want to do with it. So you can hold on to them, rent them out, and get rental income, or decide to sell, get your cash out, or probably go buy another land somewhere and wait for it to appreciate. Then you can do another JV after another year, some years. So just to shed some light to that.
Yeah, good comment. So, I mean, again, it's like if all right here, it's case specific, location specific, and all that kind of stuff. So, Big E, I would say get in touch. You guys, I know what they're talking about, and then give them the specifics, and then take it from there. Dr. Ronald, can you hear us now? Hi, I was having real technical issues with Doctor. I really I want him to hop into the space. Let me get Real Guru NG. Real Guru NG.
Yeah. Thank you, Carlo. I hope you can hear me.
I can, sir.
Yeah, quickly, I want to comment on some certain things. Some people have made comments about the 25 million naira. I'm an architect and a construction manager. I can tell you it will not go anywhere. But this is my advice to Nigerians and people who want to venture into real estate development or build any kind of house. This is what we do that will help you. If you want to build any house, you look at your pocket, make a design, and consult a quantity surveyor to give you a proper breakdown with the current market value. What some people do is that they trust their contractor. Contractor will tell you that we are going to start, that we are 25 million will do it. Halfway into the project, you will realize that you've put in over 30 million. And the guy is hanging you. You can't go front, you can't go back, you can't take him to court actually. Because when you're looking at the price of material, you will tell yourself the truth that the money that you were told that it will cost in the first place is impossible. So I will advise that if you want to do any project, get a team. Have your architect, have your structural engineers, not when you just have the architectural design, you rush to a quantity survey. You need a proper breakdown, your structural design, your mechanical design, your electrical design, and give it to a quantity surveyor to quantify for you. The quantity surveyor will give you a breakdown of everything and what it will cost. So that is on that part, because most people who are abroad, they want to start a project, they want to say, my brother, this person does it for me, and at the end of the day, you see that you are losing huge amounts of money. Another thing is that I want to talk about the real estate industry as a whole in Nigeria. There's a lot of fraud going on in there. We really need to checkmate what is really going on. You see what people do these days? They get land, they will go and clear it, present well-animated video of what it will look like, and promise you that they're going to fix infrastructures like drainage, road, electric poles within the next 12 to 24 months. And they collect money from people and abandon it. After 5 years, nothing is done. You can't even resell because you just bought a land in a thick forest and nobody can take you there. You don't even know your plot. So some of these things, we have real estate developers on this platform. And there are a lot of people who parade themselves as real estate developers in Nigeria currently. I call them fraudsters because when you collect money, I've had places where my clients bought land 5 years ago, 900,000. They can't even resell it for 1 million naira now. Mm-hmm. So in most cases, when these people come to you with these juicy offers, ask questions. Sometimes they're very smart. They're going to tell you, we'll do this, we'll do that.
What kind of questions? What kind of questions should we ask?
One is this: you need to find out whether, because another problem is people selling government reserved areas. You're going to find out whether the land is duly procured. And another thing is this: people don't ask questions. You ask registration, CFO, and all that. Is the estate design approved by the government? That's another thing. If a real estate company would take the pain of going to the government to present their design and pay all the necessary things to get it approved. I think that's a good step. So these are some of the things. You ask for the documents they have. You make inquiries about their capacity to handle such projects, because they can get lands 200,000 from the community, and they start selling 700,000. And they will take your money and go and do chieftaincy title. And they will leave that estate and tell you that we have another one in Abakaliki, another one is coming up in Abia, another one is coming up in Enugu, another one is coming up in Lagos.
Okay.
They've not developed any.
So if I got the key point you made there real good is that number one, when we want to build, go to a quantity surveyor first and get the costing so that we can decipher how much funds we need and if we can even start the project. That's a very, very key point you've made that many people do not do. Go to the quantity surveyor first before you start to build, which is, I think, the point that Black Emmett was making. Yeah. All right.
Another thing is that I have a question for Timmy.
Real quick, because I think Doctor can hear us now. Real quick.
Yes. Now, you talked about you buying.
I'm so sorry, man. It's been crazy. You know, I'm just somewhere where over the last 1 hour internet, I've changed many devices and all of that. So I'm so sorry, you know. So real quick, if everyone can hear me, I'm glad to be here.
I can hear you, Doc.
Conversations have been very, very interesting. Okay, from in terms of how you should invest and what you should do. I think something that has not been touched upon, Carlo, really, as we get into 2024, is the fact that a lot of the things that will happen in real estate this year is going to be based on the frameworks for regulation. So I've been privileged to be in certain conversations amongst government where a major issue with the real estate sector is regulation. And so whether you are investing or whether you are employed in that sector, my advice right now would be do what you need to do to be under the radar of regulation. It helps you more. Okay, so for example, I know that the SEC are coming for anything relating to when you mention the word investment. Okay, there is a stakeholder engagement around the end of this month where the SEC have put some people together to just talk about how we'll be looking at real estate investment. So I just want to say to whether you are investing or whether you're a property developer, or whether you are speculating in land or selling land, something that is going to happen in 2024 that I just must bring to light here is regulation. So if you're an entrepreneur in real estate in Lagos, for example, you want to do well to go and register with LASRIRA, which is the Lagos State Real Estate Regulatory Authority. I also know that there is a change of pattern at REDAN, which is the Real Estate Developer Association of Nigeria, and REDAN internally is currently working on also ensuring that regulation happens. And the reason for regulation is not far-fetched, okay?
Doc, I think we lost you.
To the real estate developers, they don't find the land. And this is because a lot of the people are not aware that, you know, you don't just buy land without land having appropriate title. We've had so many cases where people have bought lands and over over a period of 10, 15 years, you find out that land, you know, doesn't have the proper title. So there's a lot happening within the regulatory space for real estate. But, you know, it's not all, I don't want us to also see regulation as bad news, okay? It is just to enable we have a market that is not opaque. Currently, in this country today, the level of opacity in the real estate market, it's alarming, okay? People get into transactions without knowing what is free from encumbrance, without knowing who they should deal with, and all you hear is that they have been duped. So when you're talking at the level of the Security and Exchange Commission, or you're talking about the level at state government level, there's a lot of regulation that is coming into play. And this becomes very important for all of us because we're in a market where just looking at the National Bureau of Statistics and looking at Statista, okay, this market is being projected to be about $2.4 trillion, right? Okay, I'm talking about the real estate market. So let me break that down. The residential component of that is about 85%. So looking at the prospect, there's a huge market at play. But you see, what must happen is that I'm just trying to advise a lot of us who are on here, whether you're on the retail side of investment or you're an institutional investor or you are a producer of that asset class itself. Regulation would be a major issue. Just so that you don't get into transactions and mid-year you are stuck. So I thought that was very important to say while I still have internet. So, Carlo, over to you. If there are questions, I'm happy to take them.
Yeah, Doc.
As long as I have them.
Doc, the first is let's get you to introduce yourself, just so that folks know who you are and know where you're speaking from.
Oh, okay. My name is Roland. My name is Dr. Roland Ibinova. I'm founder for PropCrowdy. But over the last 20 years or 22 years, I've worked as an advisor at Pison Housing Company. Pison Housing Company is a real estate development advisory company. We work with a lot of multilaterals, IFC, World Bank, and then sub-national and national government as well. So basically, we help through the real estate value chain just to, in the role of advisors, really, we don't do development at Pison Housing Company, but we work with a lot of developers, like I said, whether subnational level or national level, and also multilaterals. So that's a bit about it. But PropCrowdy is a new entity that we are focused on crowdfunding. We are one of 3 enterprises that recently got license from the Security and Exchange Commission. But as at date, we are the only real estate crowdfunding platform. So if you wanted to get onto the real estate investment ladder with as little as 10,000 naira, you have the opportunity to invest at PropCrowdy.
So just quick follow-up. So PropCrowdy, if I was an investor, I wanted to buy into a house, how does it work? I want to invest, I go through you. How does it work?
Okay, so I'll stay through all the session, Carlo. At the beginning, you did a great job of talking about yield and introducing yield to the market for real estate investors. So what typically happens is that if you wanted to get onto the real estate investment today, you probably need to be modest about 500,000 naira, and that's if you want to buy land in some urban area. But what we are saying at PropCrowdy is that you may not have that 500,000 naira now, but you want to get into a project where the developer needs about 100 million naira or 200 million naira to complete that project. So what typically happens is that the developer comes onto the platform and crowdfunds the money that they need for development. So you, with as low as your 10,000 naira, you can earn up to 30% of that, between 20 to 30% of that, depending on what the market is saying from that developer. So we are saying that you don't necessarily need to have that 500,000 naira, 1 million naira to get onto the real estate investment ladder. So that's basically what crowdfunding is. It's different from fractional investment because oftentimes people mistake crowdfunding and fractionalization of real estate. So I'll just take 30 seconds to talk about fractional real estate. Fractional real estate is you owning a part of real estate. So an apartment, a 2-bedroom apartment in Ikota, for example, is 60 million naira. So what happens with fractional real estate is that the owner of that apartment or the seller of that apartment can say that this 60 million naira, I want to divide it into 60 units. In which case, with 1 million naira, you can co-own that apartment. What this means is that as a co-owner, 1 million naira, you earn 2 things. One is the yield, and the second is the capital appreciation. So in terms of the yield, you are saying that 60 million naira house, is it possible to rent it at 6 million naira per annum? So if you are renting it at 6 million naira per annum, that gives you a yield of 10%. But trust me, in Lagos today, the maximum yield you can get would be in a traditional real estate investment. When I mean traditional, just build and sell and then rent. You could probably get 5.5% and 6%. But we will now have prop tech companies, okay, who have helped in increasing yield. So basically, what these prop tech companies, what they do is that they then take these 2-bedroom apartments, okay, and turn it into, for lack of a better word, like an Airbnb. In which case, instead of, with the example that I gave, instead of earning 6 million naira, you can earn as high as 8 or 9 or 10 million naira. So which means they can increase your yield. So that's basically fractional real estate. Crowdfunding is that you crowdfund, the developer uses the money, when they finish, when they sell, they pay you back. So typically what happens, the developer will agree with what they will pay you in crowdfunding, and that's the debt side of crowdfunding. There is the equity side of crowdfunding. I think I don't want to go into all of those because the equity is almost like fractional real estate. It just means that we want to develop 10 units, 10 apartments, 10 units of apartments in 3-bedroom. Okay, and the developer says that, look, I want some people, maybe I want to sell half of this development to other investors. In which case, we can do equity crowdfunding to bring those investors in. Now, those investors will not have to behave like fractional real estate investment, because now they will be looking at the yield for the investment that they have made, and then at the exit of equity crowdfunding, when you sell, they can now earn capital appreciation.
Gotcha.
But like I said, whether you are doing fractional real estate, whether you are doing equity crowdfunding or debt crowdfunding, please ask for very salient things when you are doing investment. Please ask. For a lot of people doing fractional real estate, somebody who produces you a cooperative license, it helps a lot. So which means they are in a cooperative setting. Each state have a cooperative, some sort of separate. For example, Lagos has a cooperative license that they issue to people who are doing fractional real estate. So ask that person who's trying to sell to you, do they have are they registered with CAC? Do they have a cooperative license? This is for those who are not able to obtain the SEC license yet. But whatever you do, you must ask questions. Okay? For the developers who are selling land, ask them whether they register SRIA or whether they are registered with REDA. Now, what you find in Kano at times, you see flyers where people say cashback. So they are telling you, buy land for 1 million, we will give you 50%, we will give you 1.5 million. They tell you that buy land today for 1 million, in December we will give you 50% cashback. The bubble will burst. And a lot of those transactions are going to get stopped in 2024. If you like, take this as expo. It's not a prophecy. I'm just aware.
Doctor, I want you to talk more on that specifically, please, because I have lots of folks that have sent me that. Talk more on that, please. Doc, I don't know if you heard, if you can hear me. Timmy, can you hear me? I think Doc is off. Timmy, can you hear me?
Yeah, I can hear you.
Yeah, I think Doc is off. Yeah, and Timmy, he made a lot of points about, he said traditional rentals or traditional yield was about 4-5-6%. He talked about the cooperative licensing. He was going to talk about this buy land and we'll give you cash back. I've seen lots of folks that send me DMs on that. Is that a fraud? Some will say buy land and give me DM. So I wish he would have come back. But Timmy, for you, just real quick, people are asking you to clarify this Surulere 4 million. People are asking you to clarify that real quick. I've put on the tweet that it's lease, but just clarify that for folks that are listening. They're talking about like 4 million. Just quick clarification.
Okay. So to clarify, right, the apartment, you own it for 15 years. It's a 15-year long lease, right? So you don't own the apartment outright. But the idea is that in a space of between 4 to 5 years, you make back your capital. So you have about 10 years of full-on profits, and then you understand that yield will continue to grow over time. And the way we were able to make up to that amount on a one-bedroom, like I said, it's typical traditional rental on a one-bedroom in Surulere. This place is off Adiniro. So I don't know For anybody who knows that, Adeyinu Ogunsanya is this place where you have, ShopRite in Surulere. It's just off Adeyinu Ogunsanya. So typically those places, 1 bedroom rents for between 1.5 to about 2 million, maximum 2.5 million for traditional rental. But in this case, we are doing Airbnb and monthly rental, right? So these are high yield rental models. That is, they give you better yield than doing traditional rental, right? And as a developer, and I'm also an investment advisor, if you have the potential to make more returns from your property, of course, that's what I advise you to do. Right? So that's why we are going strictly for high rental, monthly rental, and Airbnb.
Okay.
And we are managing the property, so
yeah,
we don't have worry about getting people to stay in the property and all of that. Yeah.
So Timmy, that was a real clarification. But Real Guru had a question for you before Doc came on. So I'm going to don't worry, you're going to speak, but let me get Real Guru to ask this question, and I'll just go back to the room right now. So Real Guru, go ahead and answer a question real quick to Timmy.
Okay, Timmy. Now let's look at this way. You said the apartment is going for 15 million, right? For 15 years.
Yes, that's correct.
So is proper to say you have 1 million a year, and now you said that. Are you saying that if I give you 15 million, you can give me 4 million? When I give you this 15 million and I want you to manage it, you can give me 4 million yearly, and you will not tax me. What about the cost of running the facility, power, water supply, gas supply? Because for Airbnb, you have to provide all these things running. So what about the cost? Are you going to deduct it from the money? And if you're going to do that, at the end, what will I have left?
Okay, so that's why I said initially that we use the conservative rate. So to answer the question directly, yes, you get 4 million naira every year net, right? So the total income from the apartment on Airbnb is going to be in the excess of 5 million, right? But we understand that, of course, running costs, facility management, and all of that. So those are already factored in. And we also understand that, for example, when we are charging a guest, say for a 1 bedroom apartment, we're charging them, say, 30K per night, right? 30, 35, 40K per night. Whatever it is they are paying, the service charge is already, built into what they are paying. So you, as the person who invested in that apartment, are not the one paying that out of pocket, right? So that 4 million is net that comes to you, right? After all of the running costs, service charge and everything, right? So what is actually going to be made is in excess of 5 million.
And 1 million can run the apartment for a year, you think?
So it's not just one apartment you get. It's not only one apartment. It's a full service building. So that cost, being split over 8 units, reduces the cost on each of the units, right? So yes.
Okay.
I think that's a good clarification. Again, to me, I'm just replying on Twitter. I think the 4 million Timmy is talking about is not from one person paying rent for 1 year. It's the total yield on that square foot space for short-term rentals. It could be 2 or 3 folks, but that space is going to generate for you as investor 4 billion. Tim, am I correct?
Yes, correct.
Okay, super.
I'm talking from experience too.
Oh, but why don't you give him 4 million? You give him 4 million. Let's give him 4 million. Let's see if it's going to give you $1 million a year. Then the rate is at 28%. I just said it here. So if someone can give him the 4 million and doesn't pay, then come back to the space and they will bring it to me again. I mean, it's an opportunity. Doctor before he left has said ask them for a lot of documentation. Talked about cooperative and all that. But real quick, before I add other folks, Timmy, Doctor was talking about folks that will tell you invest today and get cash back. I've seen it a lot. Do you have any comments on that?
Okay, so because I'm in the space, I've seen a couple of it, right? And from my understanding, I'll tell you how I think it works, right? So for development companies always need cash, right? And this is what they do. if you have a land, the company already bought that land, right? So what they are doing is trying to secure another land at current value, right? They don't want to sell that land yet. So what they now do is they are just basically collateralizing the asset they have right now. So this land that they are using it as collateral to get money from you. So they go locking another deal, right, at the current value of the land, so that the land doesn't go up. So when they've locked in that deal, they are already selling that land. So people who want to buy, they bought that land with the cash that they got from this cashback scheme. Then they are selling that land, of course, with the markup and everything. It is from that money that they are now giving you back returns and everything. But of course, it's now a very, very huge function of what development company are you doing that with, right? As I speak, I'm not sure I can really, any name comes to mind. But like some of it has gone bad, but is a model that works, right? It just depends on how well the company manages it, right?
Okay.
Sometimes I would say that some companies don't know when to stop. So,
All right.
For example, if what you have on this particular estate is a total of 100 plots, and then you want to do a cashback scheme or model on it, once you've been able to do that on 100 plots, you should know that you're sold out, you should stop. But because people still bring money to them and say, I want, and then they still want to collect money, so they now overshoot what they should take, and then it becomes an issue when it's time to pay back.
I just, my gut feeling just tells me something off about it. Giving people cash back for property. Because property needs cash. So why are you giving me cash back? If you're giving me cash back, that's a return to me. So it's no longer a property deal. It now becomes a bond to me.
So the property is not,
I'm just worried. I wouldn't advise. I'm wary about it. But let me get. I've got this lovely Ariana. Thank you. Did you have a question, Ariana? Doctor is gone, but we have lots of folks here. Ariana, real quick. Going once, going twice. Abbas, please go ahead.
Okay, good evening.
Hi.
Kano. I'm a bit interested in what Timmy is saying because I'm trying to run the numbers in my head. I have different scenarios to what he's offering, because for me, I understand the concept he's trying to build, but my question is the location, right? So you think such a location will give you such a high yield return?
No, but just to be clear, what he's saying, I don't know if you just understand the point. We can explain better, but he's talking about short-term rentals. You're not going to own that building. And the rentals he's talking about...
I understand the concept.
Yeah, okay. But let him tell me real quick.
He's doing short lease. He's also doing probably...
the numbers, right? As of today...
Yes, I'm listening.
As of today, the average that a one-bedroom apartment goes for in Surulere per night is 35,000 naira, right? Let's do that, say by 30.
First and foremost, let me understand what your one-bedroom apartment is. It has a parlor and a bedroom.
Yeah, living room, bedroom,
and a kitchenette.
Yes.
Okay.
And this, you can verify this. Just go online, look for short let one-bedroom apartments.
No, I know the values.
So let's assume for 30 days, 35,000 naira times 30, right? That is a little over 1 million naira, right? We have how many months in a year? We have 12 months. Multiply that by 12. We have 12.6 million naira, right? But of course, when you are doing projections like this, you also have to be realistic. So let's work with a 50% occupancy ratio. So let's say...
I've done that value. That is 7 point something million. I've done that.
Fantastic. So...
I've done that, yeah.
Say 4 million, we are being conservative, and we are also factored in the cost of running the place. So you see whether...
Yeah, because if you're doing a lease, for instance, for someone who wants to stay 3 months, 6 months, so you have to give such a discount, right?
Mm-hmm.
that comes with it. So I did the numbers at 50%. It's giving me 7.2, right? Yeah. So at that 7.2, I can understand where your 4 million return comes in. Is that not too high on the offer?
No, you can just try to check how much.
No, I mean offering 4 million as a return per month.
No. So because I'll tell you this, right?
Because exactly what the person is paying you. No, I want to land somewhere. Exactly what the person is giving you. It's basically $1 million per annum, right? That's what it's giving you. So you are guaranteeing 300%.
Yeah.
Okay, I understand. Okay, let me say this, then I can just wait maybe later on because I understand real estate in Abuja, so where I may need to speak away. But let me tell you from what I understand in the concept that you are offering. To speak, yes.
That we are offering, right? This is something that we've done, like for multiple projects. You get it? It's a working model. This is just, one of the current projects that we are running. So I just mentioned it as an example, to be honest, but it's just interesting that people showed interest in it. This project I'm talking about is virtually sold out. Like I said, it's just 8 units. What is there is just maybe 2 units of 1-bedroom apartment, and I'm not even sure we're looking to sell. We're looking to retain those 2 units, right? Except people get interest.
Yeah, for full disclosure, Timmy, like Timmy is making the disclosure now. This is already done. I think they are doing more, and I think Timmy has been here before. I think I know Timmy and all that. But just for full disclosure.
It's a
yeah. So Abbas, I don't want what I'm saying. I want us to. I just want, because people are following. I want people are following. It's a space, right? I want people to follow. So what Timmy can, he's come on the space. If you guys want him to come back again, I will bring him specifically and he'll talk about his specific. But I'm just asking Timmy a question. Timmy, can we scale what you are doing and ask other folks, is this scalable now? Because it looks like you are. Is this scalable? And if the answer is yes,
I will even tell you, right? We've had conversations with a couple of companies, right? So the thing about this thing is, that's one of the reasons why we, for example, are primarily focusing on the mainland for now. Because if the demand for apartments on the mainland is 200, what is available on the market is about 10 to 15. So you can see that wide gap, right? People are literally ready to rent apartments that you are still building, not buy. They are ready to pay rent and wait for you to finish building. So that's how huge the demand is for apartments. So,
can I ask another question?
Sure.
What kind of services are you offering in there? 24 hours light? Please, can I just know the services you're offering?
That's your basic service in the central gen, solar to power common areas, security, and just basic things that you would want, in an Airbnb apartment or monthly rental apartment, right? So yeah.
Great, Timmy. Great, Abbas. I think he's more or less answered those questions. Let me get Ifeanyi. But Abbas, great question. I like the numbers check that you did on that. I think it's wonderful. If you have something that you'd like to share as well, let me have it. But I think good interaction.
Yeah, I want to check. Let me allow few speakers to go. I have something I want to share regarding Abuja real estate market.
What do you want to share? What did you want to share?
We are talking about the risk and the opportunities, right?
Mm-hmm.
In real estate, with focus basically in Nigeria. So I'm actually a business developer. So I do a lot of concept development, funding, and also the marketing in terms of real estate with a base in Abuja here. I've seen a lot of mistakes that people do make, especially when it comes to this JV. I've reviewed most of the JVs ongoing presently in Abuja, and I've seen high risk of abandoned projects, high risk of delivered projects in terms of infrastructure and some other things. One of the key risks that I see here is that most people that are going to JV, it's now more like a norm for landowners to demand 40%, 50% of the assets that are being built on this land, irrespective of what the land value is. Because I have intervened in one of a few cases where I've been able to analyze that, and I'll always come out with the fact that most of these developers are either in a hurry to use those assets to get money themselves. They went into such arrangements. Now, the JV in most cases, people don't put into consideration the land cost itself. What is the value that the landowner is bringing in, and what is actually the total value of the buildings in the development itself. Now, this has put a lot of subscribers into high risk because it always ends up in litigations where you have the situation where the developer will not be able to meet up with his own part, and
Abbas, I want you to land. Yeah. I want you to land. If you make a question or a comment, but I want you to land.
Okay. So what I would say is that the potentials are there, the risks are also there. So people should be wary of most real estate investment, especially when it comes to a situation where the developers don't really own the land. It is a very high risk, because there is always one or two problems. So there is a need for due diligence in most of them. Because if you are looking for the basics, like the land documents, they will be intact. If you are looking at the development approvals, they will also be intact. All those other checks and balances will check up. But at the end of the day, you have to really ask questions in relation to what is actually, if the land is third party, what is the agreement between you and that third party?
Right, good point. Ask for the agreement, review it, and all that. I'm going to get Durabon, but let me just for the real estate folks here. Someone sent me a message. It says just for context. It's giving context on Airbnb across the world. UK Airbnb average occupancy rate 11% in London, 14% in Edinburgh, 16% in Glasgow, 13% in Manchester. The average monthly revenue is about £2,414. Most profitable city for Airbnb is London. So if you pick London, occupancy rate is 11%, average is £2,414 and all that, just for context. So I think it's good context here. Durabon, you've got the floor, sir. Durabon, you've got the floor. Go ahead.
Yeah, hello.
How you doing?
So this guy just give me, I was in the middle of something. So I wanted to comment on a couple of things. So first of all, person that talked about BUA and Lafarge and the average price of cement.
Yeah,
so
that was Ken.
That BUA just increases its price because Dangote increases its price. That is false, right? So basically, Dangote has almost like a monopoly of the system.
Dangote has a monopoly. Did I hear you right that Dangote has a monopoly? Is that what you said?
It's almost a monopoly. I'm trying to explain it. So Dangote produces 35 metric tons, 35.02 metric tons of cement every year, right? Lafarge does 10 metric tons, while BUA does 11 metric tons. Dangote has 3 plants. I was eating. Please, can you give me like 5 minutes?
Sure. Come back. Yeah, come back. That's fine. Ifeanyi Okoro, come back, though. Just give me a hand up when you're ready. Ifeanyi, please go ahead. Ifeanyi Okoro, please go ahead. Ifeanyi, go ahead, sir.
Hello. Good morning.
How you doing?
Fine. I'll speak on 3 things. Like the JV, the previous speaker before this spoke on. Then also allocation condition, and lastly, the real estate space for new entrants who want to invest in, to democratize it, that even a newcomer can have a share. So like I said, the JV, I've been involved in some deals that
most places on the island in Lagos, I live in Lagos, you find out that most especially the Highborough area, I'm not talking of the mainland, most of the properties there are always JV by the owners. And you find out at the end of the day, the developers always want to sign an agreement to use the JV documents or whatever to get loan. But now most owners of property have become more wiser because they will ask you for commitment. And even though it's 30%, then when you proceed, you pay the remaining 20 or 10%, as the case may be. So now it's not more that way. When they give you JV, the owner will tell you, okay, after 6 months you pay me. And most of those developers, they start looking for money. And once it's obtainable in most places like Ikoyi, skyscraper building, high-rise building, they don't build low-cost housing like what you see on the mainland. So it's becoming a problem. And the cost of land, there is some of them are sold in dollars per square meter per million. So we begin to ask, in terms of access to funding, and such areas, the property sells faster because it's high network HNIs that come for such property and C-suite clients. It's not people who are just building up their portfolio in terms of finance. So it's a different ball game, and those are some of the challenges. And if access to finance is a problem, but there is prospect there because the whole of most places in Ikoyi, VI, and partly Lekki are on JV, and they don't deliver. It's in every 10 developers. Let me just say maybe 4 or 5 delivers. It always end up in they don't meet up with the deadline, finance, or maybe structural issue. So and sometimes regulation from governments, they don't do their proper regulation. So that's one part of it. I want to speak on the issue of allocation condition. It's been a problem. Most people buy properties in Nigeria, most people in diaspora. You see them, the real estate company tells you, oh, just make 30% deposit and the properties become your own. In the course of making that 30% deposit, they tell you, oh, we need to give you documents. Oh, you as a client, you will now say, okay, when do I get my property? The 6 plots of land that I'm paying for. They say, oh, don't worry, just make your payment within some timeline, we'll give you your property. And it becomes a problem. Some of them, they don't spell out their condition clearly. Oh, you have to pay at least 50% or 70% before I take you for physical allocation. Or they won't tell you that, okay, when you've made your payment fully, we are giving you 6 months after allocation to start building. Or, so it just varies anyway, because some clients will want to buy and say, okay, let's speculate. After 2 years, we sell with high yield and reinvest our money in something else. So most of the real estate companies, they are guilty of those things. And I think where these issues have to do with more of regulations. Those are some of the issues there. And there's a lot of real estate company in Lagos. They are just they sell land more, they are speculators, and they don't develop. So and they expect you as a client to buy land and start developing it. It doesn't work that way. Then the last one I want to speak on has to do with allocation of land. We all know that we have a proper housing deficit, and it's not looking pretty good because no matter how we factor out the HNIs and the C-suite, every year we have fresh people who are coming into the labor market, entrepreneurs who want to own a piece of real estate. And those are things that should be encouraged. But what we see here presently, I don't know how it's going to happen because time seasons have changed. What we saw in the 80s, early 80s and late 80s, whereby people could pay for property instrumental, though there was no inflation rate then, and even though there was inflation rate,
all right,
and the cost of goods and services didn't move this way, so we have a problem. So I think those are issues within the private sector they should look in to create solutions.
I got you, sir. I got you. I got you, fine. Yeah.
So I use the mic. Somebody else could speak.
Thank you, fine. Appreciate you. Let's get Uzo in here. Uzo.
Hi, Carlo. Can
What's
you
up?
hear me?
I can hear you loud and clear, sir. Go ahead.
Good afternoon. Good afternoon, everyone. And nice job you're doing, Carlo. I always listen every now and then.
Thank you, sir.
Yeah. Yeah, I just wanted to talk about a few things and then ask you a question. I was listening to Timmy, and I think a lot of people had a few doubts about what he's offering. But I mean, if you look at it from the angle that Nigeria has huge housing deficit, you understand that it's possible to achieve those numbers. I mean, they say Lagos is about 25 million or thereabouts. So, I mean, if you look at how many countries in the world, have population of above 25 million, it means that Lagos is more populated than so many countries. I think there are about 230 countries in the world. Last time I checked, and about 60 of them have population of 25 million and above. So Lagos is more populated than 150 countries. So. And housing is one essential need, So in Lagos, I know, Carlo, you always speak about one-bedroom apartment. I was opportune to work with somebody to rent a two-bedroom apartment recently, and just like, I don't know, someone mentioned it, just before they completed the building, people were rushing to take the property. In fact, a lot of lobbying was going on. The landlord had to increase the price along the line because, I mean, it was one of my first experience with renting. In fact, in the building, he had about 4 units of two-bedroom apartments and then about maybe another 4 units of one-bedroom apartment. One-bedroom apartment sells like fire. Like, it goes real quick, Even before they concluded, that one had gone. So the one we're looking at was 2 bedrooms. So, and this wasn't even in the prime area of Lagos. So I think it's possible. So anyway, Carlo, you also mentioned something about, I think you touched on exchange rates in bringing funds into Nigeria. I happen to have done a few projects in Nigeria, in Lagos. So I mean, it doesn't make sense if you intend to take the money out of Nigeria, and the reason is because I just like looking at numbers a little bit. I did a project last year, started around maybe March. In March, the exchange rate was around 730 naira to $1. Completed around November, December. Exchange rate was at 1,200, right? If I then did an average of, my cost of funds, between March and December. So that gave me about 950 naira to $1 for, the money we injected. Let's assume it's $50,000, just for the purpose of analysis. So if you put in $50,000 in a project between April and December last year, that means you would have injected about 50 million naira, right? And now you then sell the property in January this year. Yeah, let's say you're lucky, because of course it's going to take a little while, but let's say you're lucky to sell it, in January this year. I'm just speaking from the aspect of someone that wants to sell anyway. So if you're selling in January this year, you then sell at 1,450. Let's say you were lucky to sell at 80 million. You put in 50, you sell at 80. If you want to exit the market, the Nigerian market with, your principal and interest, you then be leaving with about $55,000. So your profit would have been 5,000, maybe 10% within that time frame. But in Naira, you'll be making a lot of profit because Naira times.
Yeah, I want you to get to your, if you don't mind me, just get to the point. So I'll ask a question because we have a.
So I'm just saying that it doesn't really make a lot of sense if you want to exit the market with the funds, but if you want to keep the money in Nigeria and keep rotating, I think it's a fantastic business.
Yeah, but remember this, guys. Remember this. If you have an asset if you have an asset in Nigeria that you want to buy, last year, that asset, if you had $1, would have cost you more if you're coming to Nigeria with $1. So, for instance, if you had a property in Nigeria you wanted to buy last year and you had $1,000, it would have cost you more. Today, that same property in Nigeria will cost you less if you have dollars. If you buy that property in Nigeria, you're not going to take the building out of the country. You can say, okay, it's my property. If I come back home, I have it. I'm going to get utility from it when I stay in it. But it's your property, bought at a discount today because the Naira value is weak. Will Naira be weak forever? I doubt it. Because over the course of the year, the Naira will gain value if things start to happen. If we start to have exports of crude oil, the Naira would gain value. Which means the property you have bought with discounted Naira, with your dollar, would rise back in value. So, but it's good to clearly separate the value of the property and the yield. In which case, you're not buying the yield, you're just buying the asset. It's going to be poorly performing, but you bought it. So, it's both ways. If you are buying because you want to sell to take your money out in dollars, it's not a good idea. It's not a good idea. But if you want to buy assets in the country, if you want to get into the stock market, you want to buy commodities, you want to buy real estate, you want to buy land, this is an opportunity for you because the Naira is on the value, so we say has lost its purchasing power. So you are coming in now with a higher purchasing power if you're coming in with dollars. And you got to understand that advantage and take advantage of it. This is talking to the diaspora folks now. Don't say Nigeria is bad, Nigeria is bad. Look at the opportunity today. If Brazil was a very, very bad country years ago, folks that invested in Brazil today are the millionaires, right? That bought those undervalued assets when everyone running away from Brazil. It's the same thing that's going to happen in Nigeria. Whatever you say about the country, if the country remains, just by the passage of time, I think things are going to get better. This is just my view. It will take longer, but I think things get better as they stretch out. All things being equal, I have to caveat. But I think it's a good time to get into an asset that is underpriced with your dollar. That's just my own take on it.
Yeah. Anyway, good one. Quickly.
Real quick. You've already spoken, so real quick.
Okay, so I've been thinking of, is there any company, I'm thinking of an idea of doing a project without, because I was listening to the cost of cement and sand and all of that. Has anyone experimented the idea of maybe building with containers or something? Maybe do like a little project with container or maybe with wood.
Also we have all these guys all around. That we want in Abuja. There's a guy that builds flat with containers. There are many. If you Google, there's a guy in Lagos. If you Google, you see them. The thing is, those things are good to have. They are outliers. You can't scale that. What Nigeria needs, right, is to build 1-2 models of 1-2-3 bedrooms. The same model. And mass produce it across the federation. Just say, this is the model, this is the size, this is the window, this is the roof, this is the doorknob, this is the design. All homes across the country, just mass produce it. So you just mold the cement. So if I'm in Lome, I can mold that cement and bring it in. It's the same measurement across the board. We don't really have time for those. Those are good to have and all that, but we have a big deficiency. That's just my take.
Sorry, one last thing. One last question. Talking about investing in Nigeria, is there any platform where, because aside bringing in money for family and friends, people that want to get into real estate, does anyone have an idea of any platform where that matches sellers to buyers? Right.
A guy was just here, Prop Crowdy. The guy that spoke. If you go back to the space, Prop Crowdy, he was supposed to be here. He was our guest. So Dr. Ibinoba, if you look at Prop Crowdy, they are still here. They are still. If you look below the speakers, PROPCROWDY, they are still there. So follow them. Yeah, Ken, you had a question. Ken, you want to say something? Yeah, Ken, you were going to say something.
Yes, Kalu, please permit me. I would love if Doc is still here because there's something I came across 2 days ago on PDVest, and everything he said pretty much aligned with that. It aligns a lot with what PiggyVest has on right now. So essentially, PiggyVest has a particular investment up right now that I saw 2 days ago, and it's kind of novel to me, and it's different. So it's in line with that fractionalized real estate investment that he talked about, and where he was talking about issues about the issue of it being SEC approved, because the model they have right now, if you check on PiggyVest, you see it there. So it's a fractionalized real estate of 2-bedroom, 16 units of 2-bedroom in Lekki, Freedom Way in Lekki. So essentially what they've done is they fractionalized it into over 200,000 shares, and one share is going for 10,000 naira. So and a lot of questions came up to me immediately regarding, okay, if it's fractionalized and I own a particular fraction, so do I have a document that is legally recognized for me to own a fraction of an investment, a real estate investment in Nigeria? To be honest, I would really love if it was here to answer those questions, because this is a practice that can actually unlock the real estate sector in Nigeria. Because, like you rightly said, Carlo, getting loans, cheap loans for real estate in Nigeria is a big reason why our real estate sector is where it is right now. And if this kind of model is coming up where people can actually invest with as little as 10,000 in a real estate and actually get yield from rents and also capital appreciation, I think it's a great model that can be explored and to see. I know the real estate sector is a problem in Nigeria. There's too much fraud. A lot of people come and disguise as offering this and promising you that, and when you don't have a particular document to personalize and say, yes, I own this, it's a problem. If you go to court of law.
Yeah, Ken, I think we get the point. Yeah, I think what I'll just.
If Doc can come back.
Doc is not.
Yeah.
Ken, Doc is dropped and he has internet issues. He's dropped, but he's listening. He's talking to me on DM, but he's listening. But he has internet issues. So the point is this, right? Overall, not just what PiggyVest is doing, overall, right? Once you want to sell securities to a third party and you want to advertise that, I advise you to get the SEC license. So any institution telling you to invest in them and they are making you a public offer to invest with them for whatever it is, be it fractional shares, be it equity, be it crypto, they need to have a license to do that. If you want to invest with your brother, that's a different matter entirely. Your brother is not advertising publicly. He's not selling you a security. You give your brother money, your brother invest. That's a private deal between you and your brother. But once you and your brother go to your street and you say we want this street to invest in our whatever, you guys are now selling a security or making an offer. You have to get regulated. So that's the first thing I'll say. I'm not really sure what they are selling, but you want to ask for the license to do what they are doing in the first place. A while back, we had lots of agricultural companies doing invest in onion and get 24% for 1 week. Invest in pigs and get 60% in 5 days. And all that was just a Ponzi scheme under the concept of agriculture, because back then SEC had not regulated that space. So you could do a crowdfunding for agriculture, and SEC hadn't yet brought out guidelines in the past. So many folks ran there and basically used the agriculture to cover that Ponzi scheme. And they'll tell you it's got insurance. There was no insurance for the investors. It was an insurance for the assets. But when you are regulated, it doesn't mean there's no fraud. But regulation allows those fraud not to be so apparent. No stockbroker will come and tell you today, if you buy this stock, I'll give you 10%. They can't say that. So whatever you see, when someone is making you an offer to buy or sell, and it's a security, you must make sure there's regulation. Be it a bank, be it SEC, be it insurance, ask them for the native insurance, i.e. your regulator. Let's see your papers. I think if you start that, you maybe remove 50% of the issues before you can then go down and look at the person itself. What's their assets? What's their liabilities? What's their reputation? What are their reserves? Things like that. So that's what I will just say to that. Fractional shares, it's very, very good. We should have done that a long time ago because Nigerians don't have money, right? So if instead of us, we do fractional savings, we do Ajo. So Ajo is fractional savings. So we understand the concept of fractional savings, but we have to now do fractional investments where we go and say we want to buy a whole block of flats and we just input in 10,000 naira each. And as to put that 10,000 naira each, we are able to then own that block of flat, and then the renters then pay us. That's in Oyibo language, that's called a REIT, a real estate investment trust. It's the same thing. So REITs, you give money to a manager, the manager then invests, and then of course you then get the returns from that investment. The same thing, right? So the fractional share to say if the building is worth 1 billion, we would sell 1 billion units for 10 naira or 1 billion units for 1 naira. So I can buy 5 units for 5 naira and I own that building. That's a faster, easier way to raise funds. That's what PropCraft is also trying to do. So I agree with them,
Thank you.
Do your due diligence.
It's not SEC approved, run away.
If it's not approved by any regulator, don't get involved. It doesn't mean that all approved investments are good. No. But if it's not approved by any regulator, don't even go there. That's just a start. So if it's not approved, any investment that's been offered to you publicly without a regulator's approval, don't do it at all. But even when it's regulatory approved, do your due diligence. But just say, if it's not regulated, I'm not going to touch it. That's where you should start from. That's what I'll say. All right, hey, Durabond, are you back? Are you finished dinner? Are you back now?
Yeah.
Okay.
So,
you were making comments about
Dangote, right? So I said it's almost like a monopoly. Yes, it's not a monopoly, but let me put it to you this way. So Dangote's capacity is 35 million metric tons, right? While BU is around 11, and then Lafarge is 10. So first of all, you already have that Dangote having 3 times the ability to produce more than these other guys. Secondly, you have the number of plants, right? So Dangote has a plant in Kogi, he has another one in Benue, and then in Ogun State. Meanwhile, BUA has only in Edo and Sokoto State. So if I want to buy BUA cement, right, that doesn't have as much capacity, first of all, I have to send my trucks down to Edo State. Edo State is the closest one to Lagos. Let's say I want to sell it in Lagos. So you have to factor in the cost of transporting, the cement from Lagos to here. Meanwhile, Dangote has a plant just in Ibesherie that, can easily supply Lagos. So he has the capacity. He has more plants than these guys. So that's why Dangote is able to control the price of cement. It's not because the person that spoke insinuated that, because Dangote increases, all these other guys also increase.
But Dura, let's come out and say something, right? So a price leader sets prices. We know there are other operating systems apart from Microsoft, right? So if Microsoft price goes up, the smaller guys will also take their price up because now they don't lose. Yeah.
Transportation is about availability. That's why I talked about the transportation and the capacity to produce. So now, as a dealer, if I know that, as a dealer now, if my customer comes to my shop to demand for cement, I don't have cement because I'm depending on BUA. Do you understand? I'm going to close shop. So most dealers, now prefer to deal with Dangote because he's the one that gives them, products that guarantees them, the products to sell. So that's why most of them, sell Dangote because Dangote produces more than these guys, and then he has more plants, especially when it comes to the southwest. I don't know if
yes, but he's still correct to say that if Dangote price goes up, the other two will also increase their price. That's what he's saying, and he's correct because Dangote is a price leader. That's the point he's making.
But they are not doing it because Dangote is taking his price up. They are doing it because they don't have a choice.
But what are you saying, Dura? Come on, Dura.
Dangote is one that.
No, come on, bro. The price leader is called the price leader because his price leads. If Dangote's price goes up, and like you said, he has 3 times the capacity. So if I can make cement cheaper than Dangote, I make cement cheaper, but I make it in my small village in Abia, and Dangote increases price. Why would I not increase my price? I can't compete with Dangote. He already said he has more capacity than me. So why would I reduce my price and sell less than him? I'd rather increase my price and enjoy the price hike hiding under Dangote. That's what he's saying. So if the price leader...
In the agri market, if I understand you clearly, I mean, since I'm the small guy, the only way I can undercut the big guys is to bring down my price.
No, it doesn't work that way because it doesn't work that way. Because
I cannot compete.
No, you've already answered your question. You said Dangote has 3 times the capacity to supply the market, which means even if I reduce or increase my price, I can't affect the price. I am not a price leader. It's like Saudi Arabia and Nigeria. Saudi Arabia sells maybe 10 times the oil Nigeria sells. Now, if Saudi Arabia reduces or increases their price, nothing Nigeria can do will make any effect. If Nigeria increases their price, we gain. If we reduce our price, we lose. So why should we reduce our price when we cannot even affect the market price of crude oil that Saudi Arabia is setting? Saudi is the price setter. So if they increase the price, we as a marginal oil producer will also increase our price to take advantage of that increase in price. If Saudi Arabia reduces their price and we increase our price, we're shooting ourselves in the foot now. Everybody runs to Saudi Arabia.
I get you.
But you had a comment. So that's that. So if Dangote, the question he's making is this, or the point he made is this, which is valid, is this: limestone is in Nigeria, power is in Nigeria. I think they import gypsum. I'm not sure. So if 80% of the goods Dangote uses to make cement is not imported, then why are his prices tied to the dollar? I think that's the point. That if you had an answer to that, would love to hear it. Yeah, but yeah.
I get it. It's clear now.
Okay, that works.
Yeah, I also wanted to address some other things. The issue of bringing in dollars to Nigeria and taking dollars out of Nigeria. I did a full video on this on YouTube, explaining this issue, right? Yes, it's true that investing in real estate in Nigeria, right, as a diaspora, doesn't really make sense, right? But the problem is so many people do not understand how to play in this market. Like I explained in that video I did last year, I said currently the way Nigeria is, right, the only way you can make money in real estate is to become a developer, right? If and your development should not exceed 2 years. So it's a matter of bringing the foreign currency you have, do the development you want to do here, exit, take out the money, look at the market, come in and get out, right? Now let me give you an example. So you have let's say $100,000, right? $100,000 now is about 150 million naira. You go and do a development in, say, let's say Ikota, 150 million now can give you like 3 duplexes in Ikota. You deliver that project, you sell it. You take about 6 to 9 months to build it. You exit in, let's say, 3 to 6 months. That's a total of about 15 months, right? There is no level of currency devaluation because usually developers work with about 30 to 50% profit margin, right? So there's no level of currency devaluation. I'm not sure it has happened we have had a devaluation of up to 50% within a let's say 15 to 18 months period, right? So my suggestion was, if you want to invest in real estate in Nigeria, look for a way to come in, take that risk. Like I said, the only opportunity now is to become a developer. Take that risk and then make that your 30 to 50% margin. Get out and then come back again. If you don't want to do that, then you have to if you don't have the skills or the ability to do the development, if you don't understand the market, then you should keep the naira in Nigeria, right? Use it to solve family problems, use it to buy other assets in Nigeria, pending when everything will stabilize. But the mistake most diasporans make is nobody wants to take any risk. You wait for somebody to finish building. On that building, you have the developer's profit on it. On that building, you have the financier's profit on it. And the inflation and everything on it, and you still think you're going to make money. It doesn't work that way. If you really want to make money, except for those of you who are not ready to take risks, then you just know that you're just buying it for the sentimental reason, because not everybody that buys real estate to make money. Some people just probably they were not doing well.
I hear you, Duru.
So they want to buy property in Nigeria that serves as a symbol of success or of the struggle they had over there. So they don't care about the profit and loss. They just want that symbol.
Duru.
Nigeria here.
Hi, Duru. Okay. Yeah, I get you.
That's fine. There's the market for such people. But if you're the kind of person who is looking at numbers, trying to make money, then your own strategy has to be different.
All right, so I hear you, sir. I was sorry you weren't hearing me. So I would just say, just to clarify, folks, if you're trying to get interested in Nigeria, be very, very clear if you want yield or if you want to buy an asset. There are two different things. That was the first thing I started off with. Be very, very clear, guys. If you want to invest in Nigeria, do you want the yield or do you want the asset? So the point is this: if you want just the yield, Nigeria doesn't give a lot of yield on property. The property yield is very, very low because the cost of building is very high. So if you look at the denominator, it's very, very high. So your returns don't make a lot of yield for you. But if you want to buy the asset, if you want to do something unique like what Timmy is doing, you want to do short-term leases to increase that yield, that's a possibility. If you want to buy the asset and say, I'm going to own this, and down the line it's going to rise in value, and I can sell it and make a capital appreciation, that's another avenue for you. So if you bring in your money into Nigeria and you buy an asset and you sell that asset, I think it's still possible if you make a capital appreciation that would beat the exchange risk. The problem is, would you get the dollars to take out? Even though you make the profits on paper, would you get dollars to take out? Unless you then want to say, okay, I'm going to go buy cashew nuts and export my cashew nuts, and that way I get dollars. That's also something else you could do. Julius Berger, that's what they do. They earn naira, they're exporting cashew to get their dollars. So it doesn't stop you from doing that. So you have to be very, very clear. Do you want yield or do you want to just buy the asset for appreciation, hoping to sell? Be very clear on that. Don't get stuck in. Hey, Malaki, what's up?
So can I was still speaking.
Yeah, but you're speaking a lot, so get to the point if you don't mind, sir.
Last thing.
Just get to the point.
The other thing I wanted to address is the fractional real estate, right? Now, my issue with this scheme, I put it in the same bracket with the cashback people, is that it's the kind of people that are bringing into the real estate market. Real estate is not for everybody. Do you understand? What does it mean that you invest in real estate with 10,000 naira? Is it crayfish? Is it pop? Do you understand? Real estate should be for people who actually, because that is actually one of the things that I believe, because there's a bubble that is going to burst, and it's going to come from these cashback people and these fractional real estate people, because they are onboarding people who ordinarily shouldn't be participating in real estate. These people should go and be thinking of how to, improve their skills, improve their earning abilities, so they can now come into real estate properly. So it's not just for anybody. 10,000 naira, 1 million naira. Like I tell people, if you don't have 5 to 10 million naira, don't think about real estate. Go and maybe do a business. Go and do a course. Increase your earning ability. Then you come into real estate. Real estate is not.
Duro.
Yeah, there is a.
Duro, you keep on going, but you don't listen to me, sir. I'm sorry, sir. I have to stop you there real quick because real estate is for everybody. You don't need 5 million or 10 million to buy real estate. If you go to the Nigerian Stock Exchange, you can buy a real estate investment trust issued in Nigeria for less than 1,000 naira. So it is available on the stock market in Nigeria. If you want to buy property in America, I've said it many times, you go online, you can Google the ETF VNQ. That gives you property all across America. You can buy American property, you can buy Japanese property on a fractional basis. There is nothing wrong with fractional investment in real estate. Nothing. What we're talking about is who is the person you are buying from. So don't get the idea that fractional investing is bad. No. I buy VNQ. I buy property in America, in UK through ETFs on fractional basis myself. I do that. In Nigeria as well, you have real estate trust issued in Nigeria. UPDC is issued in Nigeria. It's a REIT. You have lots of mortgage-backed securities issued in Nigeria also that you can invest in. So don't get the idea that it's bad. I would rather we talk about the promoters of the fractional shares. So there's nothing wrong with fractional ownership of property or any asset. What you should focus on is who is the promoter of that fractional asset. If you have 1,000, don't wait till you have 5 million. Invest early, get into that space, and if you do your homework well, you're on the right path, right? Okay, let's get Malachi. Malachi, let's take that right. Eze Malaki, going once, going twice. Abbas is back. Mr. Timmy, thanks for hanging out with us for this long. I do appreciate it. And I saw what you sent. What you sent to me on the notification. Is that a new one or an old one? The one you sent to me, sir.
Oh, okay. I think I was just answering. I don't know who, real something. The guy that was asking about the model. So I just showing that this is a property. So it's not like it's not even off plan, right? This is property that we're handing over in March, right? So the property is finished, right? So and then we've done this for multiple properties.
How many rooms or how many is that one that you just shared? How many? What's the number? What's the size number of?
This is the one I was talking about. This one that has 8 units of 1 bed. Two living.
It looks kind of small from the side, from just looking at it.
Yeah.
Okay, excellent. AR Olusola.
Yes, can you hear me?
Yes, kind of low though. If you speak up, I would love it.
Okay, hold on.
Hello, can you hear me?
AR, yes, I can hear you. Please go ahead.
Yeah, I just quickly want to jump in there when this guy came up and was talking about fractional real estate. First off, I'm an architect myself, and I work for real estate developers in Nigeria. One, there are a couple of people who are already into fractional real estate. Now, there's a huge problem. The reason why fractional real estate is good for Nigerians is because there are so many people who don't have 150 million, 200 million to put down in 24 months to acquire properties. Now there's this system that's going around. There's a group of guys who they own apartments in Lekki and VI. Now if you ask how have they been able to acquire these properties, it's through fractional real estate. They pay in bids as a group, and they've been able to acquire properties in these locations. Because when you look at it, there are so many young Nigerians who don't have assets, real estate assets, in these prime locations. Because they don't have 150 million to put down, 200 million to put down in 24 months. So it is a scheme that we should continue to encourage Nigerians to get into. If you are a group of friends, 4 or 5, you can come together and buy properties. There's absolutely nothing wrong with that. There's absolutely nothing wrong with that. And if you're getting into real estate, do your due diligence. It's very, very important. I wish we have validators, accreditors who can, checkmate these developers so that people don't go around just working with or buying properties with illegal developers, So, as it is, the real estate industry in Nigeria is going to be cleansed off from these illegal people as time goes by. As regulators come in and you see people start, investing their money into these areas with safety guarantee, and as it is, you need to do your due diligence. That's just what it is. Make research, find out. Don't just say you want to go and invest with one developer because the developer is popular. You don't do that. Do your due diligence. There are some developers that are doing very, very well on this same island, and they are not that well known, but they are doing very well. Their track record is fantastic. Developers out there are doing very well. So that's just what I say. I should come on and jump into. Fractional real estate is the best. If you're a young man around,
I got you. I mean, you've made a point, but just to be clear, right? Like I said, if you have friends, you guys want to get together and do any investment, that's fine. You guys should do that. I mean, you're watching Arsenal, put money together, build a house, enjoy the proceeds. That's completely fine. Just want to make this caveat real quick for you. Once you start to market that scheme to third parties or to advertise it, you need to get licensed. So make sure you keep it close within your friends that you know, right? That's your own business opportunity. That's fractional. Like I said, Ajo, this ajo that we do is fractional savings. You know, you want to buy something, so you break it down into bits. It's the same concept. It's communal finance. Nothing wrong with that, right? So you just want to make that point that is clear. You know, don't sniff on it. It's a way to buy. A long time ago, there was a space we had here a long time ago where we brought in an Indian lady. Because if you go to America, you see almost all the gas stations. You go to the gas stations, and I don't want to be stereotypical, or you go to the motels, you see it's run by folks from the Southeast nations, right? And if you look at the name on the license, you see it's called Patel. You go to the gas station, Patel, the motel, Patel. You know what these guys did? Most of them, when they came to America and Canada, they came when Idi Amin drew them out of Uganda. And they were, so they were driven out of Uganda. When they landed in America, America gave each family one-time grant of about $10,000. And that was capital to one person, right? But it can't do anything with $10,000. So what these guys did was that they formed a consortium of families, and you see maybe 10 of them will come together and they have 100,000. This is back then, so it was a lot of money. So when they come together, they then go and they would buy a motel. So why did they buy motels? Because they could live there with their families. Then they would work in the motel, cook in the motel, and what they did was the 10 families would buy one motel. Then the next year, one family would use the motel as collateral to go buy his own motel. So the next year, another family would use 2 motels to go get his own motel. And before you know it, in 5-6 years, the entire family that's bought the first motel all have their own motels, and then they just move on. And they repeat the same thing over and over. The same thing with gas stations. They buy one gas station, then the family then use that gas station as collateral to buy the second gas station. That's the same thing we're talking about, fractional ownership, where you are coming together to contribute money to buy a fraction of something. So don't make it too linear. It's a very, very good way. If you have friends, you guys are together, you don't know what to do, come together. You have old school associations, you have folks that you go to school with, you have folks you work with. Come together, buy something, land, share it up, and take yours and move on. That's how you get economic power from having just very, very limited resources. You bring it together, and then together you have economic power. So don't sleep on it. It's a very, very good way.
Can I respond?
Yeah, sure, go for it.
All right. So, I'm not trying to convince anybody, right? I also view it too. So, if I should be supporting this, but, you are comparing it to what you have in America,
No, why I stopped you was that Duru, can you hear me? Sorry, because I'm not saying what I'm concerned about is when you start to say they are bringing a different kind of people to real estate, and that if you don't have 5 million, you can't invest in real estate. That's wrong. You can invest in real estate with 25 naira or $25. That is, you can do that. It's a legal way. Like I'll give you an example. Real estate investment trusts are quoted on the Nigerian Stock Exchange, and one share is not 5 million or 10 million. So you can buy. So that's the point I'm making. So I have nothing against you saying due diligence, but to say only rich people can buy real estate, which is what you're saying, is wrong. Real estate is for everybody. If you've done your due diligence, you can go to the stock market and buy it. You can come together as a group of people and buy it. Please go ahead, sir. I don't want to stop you.
So the point I'm trying to make is Nigeria doesn't have the institutions, strong enough institutions to protect people. I know that if I'm doing these things in America or other developed nations, if for whatever reason this developer defaults, I know that I'm going to get protected by the government. But here in Nigeria, they will use the same EFCC to protect themselves from me, right? So that's what, I don't want to mention something, so it doesn't look like a person attacked you, but I don't know if you remember that this certain guy, who did this Ponzi scheme sometime, some years ago. He also had that SEC license. So to me, SEC license doesn't mean anything, right? So what I was trying to say when I meant that real estate is not for anybody is that somebody investing, there is this thing about liquidity, right? So if you're coming, as a group, like group of friends, you already have that shared mindset. So you can understand yourself. But when you're not picking up this 10 cover from so many people around, you're bringing so many characters, so many. Personally, I believe that it is like a recipe for disaster at the end of the day, right? I hope to be proven wrong, but you also gave an example of what happened with the farm crowd here and whatnot. How is it different from what is happening now? And they're not talking about an asset, an asset class that is very expensive and they're very unstable as real estate. We started the project in November, right? We are buying a bag of cement at 5,000 naira. Today, bag of cement is 6,500 naira. How does a developer plan when you're packing funds from the public like this? How when you have this kind of disparity, it's not a short time. How do you
No, but
me, I don't think I might be wrong, but I don't.
Yeah, Duru, you're making
recipes for disaster.
See, bro, all you said are problems that we all are aware of. You are stating problems. I hear you, but what I'm saying is that Nigeria has no real mortgage finance in the country. If you pull up where banks lend money to, it's not to real estate. The official figures, less than 5% of Nigerians have ever accessed a bank loan. Less than 5%. A formal bank loan. Most Nigerians get their loans from fintech and all that kind of stuff. Less than 5%. We have no real mortgage in this country. The only long-term savings we have is the pension funds, right? Now we've even allowed pension funds 25%. The point is, if you want to have a real way to save to buy a house, you would never buy a house in Nigeria. You would never. If you want to have enough capital to invest in Nigeria in real estate, you would never have enough capital. So folks are being innovative. It's you and I buy a taxi and put a taxi on the road, or buy Okada and put Okada on the road. We do it all the time and we don't think about it. You and your brothers buy one Okada, it's on the road. The Okada gives you guys return. It's the same thing for homes. You can put your money together and buy a home and share the rent if that's what you want to do. Does it mean it's all going to be hunky-dory? No. But it's your reaction and your response to lack of credit in Nigeria. You can't get debt equity. So you have to get, you can't get debt finance in Nigeria. So you have to get equity financing. Crowdfunding and all this stuff are equity. People are contributing to get ownership. So it's a reaction to a lack of debt financing. In America, once you have good credit score and income, you can get a loan. That's debt. So things like all this raising money together, they have them, but it's not as important as getting money from a bank. In Nigeria, you would struggle to get debt financing. So what's your option? Wait. You can't wait. You have to go to invest. So if you have friends, you know yourselves, go and meet a lawyer, draft an agreement, and then start looking for investments of what to buy. That's the point. If one person can't buy a house in Ikoyi, but 10 people can. So if 10 of you buy a house in Ikoyi, and you own a home in Ikoyi, why can't that home in Ikoyi then give one of you a letter to say, we are guaranteeing this guy for a loan, and that guy can then go and buy another house in Surulere. Then you guys now have 2 homes. That consultant now has 2 homes. The next 2 years, the same consultant with now 2 homes will guarantee someone else to go and buy a house in Apapa. Now you have 3 homes, the same consortium. It's the same thing. So if you wait for debt financing, you lose. Everybody borrows. Dangote is borrowing money, is it not? Nobody has enough money. No matter how rich you are still borrowing. Dangote borrows CDs. Otedola is borrowing. Everybody is borrowing. It's what you do without borrowing that is key.
You work with agri debt. Why didn't you?
Because it was a policy scheme to start with. They were doing it just to get money. There was no, what were they building? Which tomato will give you 60% in 2 days or whatever they were saying they were doing? The real guys, Presco is quoted. Have they failed? Presco is in the stock market. They haven't failed. They are there. But most of these guys were doing Ponzi schemes, using agriculture as a cover. That's what I'm saying. Yeah, it's just the same with stock, same with forex trading, same with crypto. They use those things as cover to collect money from people and say, okay, hey, we're going to do stock trading or we're going to do forex trading. It's all a Ponzi scheme. They hide under that. So it's not the property that's a problem. It's the structure. Make sure you are dealing with real people. That's the point I'm making. Because if you want to wait before you can get credit to get into the Nigerian property game, you wait forever. So if you have friends, again, let me say you have cooperative, go and form cooperative. Igbo villages have age group. Take your age group in your village and buy a property somewhere. If you have, you guys watch Arsenal Supporters Club, get together and buy Arsenal house. And say, we're going to buy this house. We're going to now own that home. We're going to get the dividends. It's the same thing we do every day. There is no difference. It's equity funding to buy an asset. All of you own it. And if you guys are smart, just like the Patels have done in America, you can own a ton of real estate just by using that model. So you copy what works. That's what I'm trying to say. That's what AR is saying as well. Nothing is foolproof, but it's an option in a society without debt financing. Hope that makes sense.
So again, I'm not against the cooperative idea. Like I said, the link is in my bio. I made a video on this, and when I was talking about how we raise funding in real estate, one of the points one of the methods to raise money, which I also use, is through your network, right? Your friends, your family, associates. But even as good as this is, I know the kind of problems we encounter. And the advantage this has over this other one is that all of us, we have like a shared mindset, we have shared experiences. So it's easier for us to understand ourselves. But it is different when you're getting money from so many people, especially people that are on the, let's say
I'm not really sure what you're, I'm not really sure.
So their own needs are different. It's not understand, okay, like, okay, it's fine.
Market women, do you know one of the largest savers in Nigeria are the market women that are saving through the guy that comes to them every day and collects money from them every day. Those women, market women, save money more than even the guys that work in the banks and the oil companies. Every day they are saving. They save every day that they can borrow. No failing. You know that, right? This is traditional savings. Market women, the guy will go around collect money from them every day. So poor people save even more by percentage than rich people because they know that's their only way out. If they don't save, they have no credit, they have no friends. So if you are poor, you know that without your own savings, you are dead. Rich people have friends. You can call your friend, you can sell your car. Poor people have no friends, they have no equity. It's only what they are able to keep and not consume that they can use as a business. So in a nation, again, in this country where you have no debt financing available, what's the option? Equity. And what is this equity? You come together, interest-free, pull monies together, and you invest. That's what we're saying. That's why you have cooperatives all over the place. If you can have an association to do naming ceremony, people die in Nigeria, you do committee of friends, you raise 1 million, 10 million to bury someone. Why can't you raise 10 million and go and buy land? A long time ago, the Lagos Business School was a particular class that bought a lot of land in Lekki area. Real example, a lot of land. It was massive land. They got it quantity surveyed, they fenced. Those guys made a lot of money. And you can say, oh, they are rich people, but copy them. If you can't buy a house in Ikoyi, buy a house in Ikeja or Mushin, but buy something because it's your pathway to wealth. If you don't own an asset and you own currency, it's depreciation through inflation. So I'm not arguing with the fact that people should not do their due diligence. I am saying that what is their option then? Only rich people should buy real estate? No. We can't allow only rich folks to buy real estate. Mr. Dangote is borrowing. So copy Mr. Dangote. Come together, form an association, know yourselves, get a lot to write out terms of contract for you guys, pull your funds together, buy something. Once you own that thing, then talk about, okay, what should we do with this thing we have owned? All of you belong to one club or one association or you belong to a church. The easiest is your religious association. Why is your church not doing this? Your church could come together and say, youth group, we're going to go and buy a house in Ikeja. Why can't they do it? What is difficult in a youth group, in a large church, putting money together, buying a house and sharing the rent? What exactly is difficult? Give the house to experts to run and they share rent. What's difficult in that? Don't wait for conditions to be right. That's the point I'm making. Don't wait till it's all good. Non-conformist. Sorry about that long response, but you've got the floor, sir. Non-conformist.
Can I add to what you said?
Please go ahead, sir. Yeah.
So the interesting thing is this is a model that actually works. I understand where Bond is coming from. Administration becomes more work because you are managing more people. But it doesn't make it bad for the system, right? Because what we're now doing is we're allowing more people participate or play in this space, and which is what we actually need. I always say that this is actually one of the things that we need if at all we're going to address our housing deficit. The more people are able to play in this space, the more inventory we are able to bring to the market, and that's the only way we are able to also address the deficit that we're talking about. So, like for example, one of the projects that we're currently doing, as much as 15, 16 million is what one person can drop because it's relatively mid-sized tickets. Some people still don't have 15, 16 million. One of the units, we had a group of friends actually come together to buy it, right? And they did their documentation. So it applies both at the lower end, and it applies people also come together to buy penthouses in Ikoyi, right? And they rent it out. And the same thing applies to buying a lease of 15, 16 million. People can come together to do it. But it's just about the structure that you put around it and how to make sure that it doesn't stress you. Right? So at the end of the day as well, that's where the place of KYC comes in. So I get you don't collect money from everybody, but at the same time, you can't shut out people from investing in real estate. Right? Because I know doctor, right? I also co-founded a PropTech company that does, these fractional investments called Realty. All right. We were even a part of, PropTech cohorts about 2 years ago. Right. It's what our people need, right? If at all we're going to let people be able to participate in this very stable asset class. There's a lot to say about it, but it's very, very workable. It's working, to be honest. It's working.
Yeah, great. Do your due diligence and all that. Non-conformist, please go ahead.
All right. Carlo, I greet you.
Hey, how you doing, sir?
Everyone on the space. I'm a real estate salesperson, so I have a little bit of insight on this. I deal in luxury real estate, mostly Ikoyi, VI, Lekki.
You're a big boy.
Yeah, we did try. So, I requested in Mike when you mentioned yield. The truth is, in my honest opinion, I feel like Lagos real estate, especially the high end, is maxing out in terms of value. So now most people, whatever value that's attached now does not make any investment sense, to be honest. It's mostly your emotional attachment to either that location or that property. I'll give an example. Many people know Landmark very well. When the guy expanded the place, built those nice shops and all that, there are a couple of guys that bought that. The place was sold in dollars. There are a couple of guys that bought some units there. Guess what? I met one of them sometime in a hotel, and I was trying to sell him something in Ikoyi, and then he said, "Bro, I have bought something in Landmark. Me and 3 of my friends who came from the US bought with dollars, And then he says the place is empty. I've not been able to find someone to rent it or put the place to use. But then, I've bought it. So for him, the only consolation that guy has is the fact that, okay, he has something next to a beach. So there's that attachment that he has to that, so it doesn't see it as a loss per se. So I'm going to come from the aspect of, so when we talk about a couple of people coming together to buy real estate, I would advise, because we have a lot of young people here, if you want to buy real estate, especially if you're going to buy in Lagos, right, go to these guys that are selling lands, that are building smaller units. There, value is still appreciating. Because I feel like, in my own opinion, real estate value in Lagos is just direct market comparison. If one developer sells at 10 million, you ask around, every other person is selling 10 million, 10.1, depending on how close they are to the road and all of that. So there's actually, just as someone mentioned, there's no regulatory body that says, no, you cannot be calling this amount in this area. So it's just one person decides what the value, or a couple of people decide what the value of property will be. So that's why it's a very, like you see, you're very correct when you said yield is not exactly guaranteed, because you go into it, you do your valuation, you do your calculations and all of that, and you find that in the next 12 years, you're not even hitting the numbers because inflation is coming up and all of that. Look at most of those real estates on most of those developments on Water Corporation Drive, some of them in Ikoyi and all of that. They've been building them since 2013, 2014. Some of those units were sold as low as 54 million for a 3-bedroom apartment. Today, you can find out that those people, they cannot deliver those products anymore because inflation has hit in so many things. So you find developers coming back to meet the people who have bought already to say, okay, can you add another 10 million so that we can see how we can. So this is a very huge problem. So that's what I'm just saying is, if you're going to go into this market, you need to be very careful. Don't let anybody just come and quote figures for you, because trust me, there are figures that you check, and then everything is mostly by direct market comparison, So if you're going to go into real estate, as beautiful as it will be, because there's that attachment of I own something here and all of that, just be very careful and understand that just do your own figures in terms of yield, because if you're going to it for investment, people will tell you buy it and use it for short lets. Trust me, you put in the market, one crazy person comes, takes the 3-bedroom apartment, they have a party there, they trash your stuff, you find that you're spending money to renovate the place again and all of those things. So it's a very risky market. So just, if you're going to go into it, just be absolutely careful. That's just what I want to say. Thanks, Carlo.
Yeah. So the thing is, again, just on a side track, you see, if you look at the most, let's pick Lagos. Yes, Lagos, Abuja. Those are the two real estate markets in Nigeria for high end, right? You would agree, Lagos and Abuja. If you come to say New York, right? New York, there's Manhattan, Fifth Avenue, but they have even the former Harlem is now an up-and-coming, very, very boutique, very, very nice place. I think Bill Clinton's office is there in Harlem. So it has gone from being this quote-unquote ghetto to this very, very, chic Soho place. If you look at Nigeria, if you look at Lekki and Ikoyi and VI, finish. That's where it stops. That's where the quote-unquote highbrow stop. Lekki, VI, Ikoyi. Why was Lekki opened? So Lekki, there was a VI, there was Ikoyi, then VI, then Lekki. Lekki Extension. Another one was Lekki Extension, where it stopped at Mobile. I was in Lagos when Lekki stopped Mobile. Before Mobile, there was swamp all around Mobile. There was nothing there. Then we've gone past Mobile. We've even now gone past Third Roundabout. The point I'm making is that most of this stuff is that there's a lot of cash chasing the same property in Lagos. So you see a house in Yaba or a house in VI. It's not going to increase. They're not going to demolish that house and build a 10 skyscraper. They're going to buy that same house. But the volume of cash coming to the country does not change. It's increasing. So what's going on is that the same funds are chasing the same real estate, so the price is going up. Quick story for you. I know a guy that bought a piece of property and they sold the other part of it. So he bought 2 plots on near where you have landmark. They sold on that part of it, right? And when they sold to one guy, he had to do the transfer title. He sold to the guy. The guy said, okay, wait, I'll tell you who's the buyer because I've sold my own. He waited. The guy said, oh, don't write this name. Wait, the guy that bought from me has sold it again. He waited. Oh, don't sell. So what's going on is that the guys were buying and trading on that land. It changed hands 5 times from him to the next buyer, to the next buyer, to the next buyer. And he said he could see the price they sold it at because he was going to be the one to write the title. So he hadn't yet written a transfer from himself to the buyer because the same property had been sold 5 times. And every time it was sold, they were adding millions and not 20 or hundreds of millions on the same property. The same thing he sold was being the same property. So it's lots of volume. Look at this currency devaluation. Now $1,000 is how much in Nigeria? Is it $100,000? It's $1 million naira. So this is a lifetime opportunity for many folks in the abroad. You went to Canada 5 years ago. If they do a REIT, if they take a home equity HELOC on their home in America, they can raise $300,000, $100,000 from America. And I'm going to bring it here. What's $100,000 in naira? Is that 100 million? What's the $100,000 in?
Yes, you're correct.
100 million. Yeah. So if someone takes his 2-bedroom small Kinkili house in New York or New Jersey and he gets a $100,000 HELOC, in Nigeria. He would buy with 100 million naira, he would buy maybe like 20 plots of land. He will wait, he will sell 20 plots of land, he will make his maybe 100% or 20% profit on the sale. Are we saying that he can't convert that money back to dollar and pay off his HELOC in New Jersey? I think he can. But it's the same property he's buying. He does the same thing, another guy comes, does the same thing. They keep on doing the same thing. The property is not developed. It's just the asset that they are buying and transferring. But abroad, they are buying to develop. Everywhere you go, new apartments, new skyscrapers. Here, you struggle to see where the development is. There's still a scarcity of affordable homes. We're building 2, 4, 3 bedroom, 4, 5 bedroom homes. The market wants 1, 2 bedroom. That's what the market wants. 1, 2 bedroom. We're building 5, 6 bedroom homes. So I don't know. It's the structure is off, but the guys that live abroad have a huge advantage. If you earn in dollars, you can buy into a Nigerian property at a discount because the naira is just so weak right now. That's just my take on that. Abbas, you want to say something? Jeez, man.
I came up again because when someone was talking about the financing, as I said, some of I speak mainly on Abuja property. Although you mentioned something like UPDC, yes, they're credible. I do a couple of business with them.
You said they're credible. UPDC, they're Nigerian now. That's UAC property.
Yeah, that's UAC property.
Uh-huh.
Yeah. I just came back from Lagos from the office, so I do a couple of things with them. You see, the one of the risks that I see here is that most of the times the financial models of these property developers are not kind of well structured. Most of them are basically speculative. This is why you have inflation hitting them every minute. Because when you are, coming out with a concept for development, you should have your financial model well structured, where you have the money, timeline. But as I said, because those monies don't come in, then we'll also have late commitments. We'll have some commitments that are not actually met in the...
Abbas, we've said this before, Abi. This is the same issues. You're just raising the same issues we've talked about, Abi.
Is that what?
I think this is the same issue we've talked about. You're just raising the same issues again, Abbas, right? The same. We talked about this.
No, somebody said something about financing. That was why I went back to it.
Yeah, we'll talk. I mean, they're trying to get other. Yeah. So
discuss it. No problem.
Yeah, Timmy. Somebody's asking. Let me just read his text in place. So Timmy, someone's saying in plain language, is the 4 million fixed? I hope after paying 4 million, they won't come and tell me a story of second year no ROI. So it's asking if the returns are fixed. Someone is asking real quick for you.
Okay, yeah. It's I would say it's fixed. I would say it's rental income. So, but a matter of fact, it can grow and it should grow.
Timmy's audio is bad. I don't know Timmy, I didn't get your audio. Honestly, it was bad. Did you guys? I heard you say, Timmy. Can you say it again, please? Your audio was cracking. Okay, let me just get Iyang Patrick. Please go again. Hey guys, what about Iyang? Go ahead. Hey, what's up, man?
Yes, good evening, Colin.
How you doing?
Yeah, I'm fine. Please, I've been following you, so I had someone say something about monetization.
Say something about what? About what?
Unitization, which is the estate investment trust. So I think he's confusing both terms. When you say real estate investment trust, the return on those investments are not fixed. Someone just asked.
No.
What happens to the market?
No, there are three. You don't mix it up. The questions. There are many questions going around. The talking guy is saying that you can't invest in real estate unless you have enough capital to invest.
So that's not true.
So that's where rates come in. Yeah, but the real estate trust is an equity type investment, so the returns are not fixed. It's based on dividends and all that. Yeah.
Yes. So that's what I wanted to clear for the guy that was talking on that. So it's free, it's open to all. REITs is open to all. But again, your return is based on how your property fares in the market. So if the property doesn't do well, then you should not expect good return.
Yeah,
so
but
if you say you need to come with so much money, again, it's true. And right now, investing in real estate, like you said, if you're bringing money from abroad, might be okay. But again, you need to think about what happens to those that are investing in Nigeria.
What happens to them? What happens to them? The landmark guy is not a... Sorry, I interrupted you. Go ahead.
Okay, so if you begin a real estate development, the capital is huge. You should be sure you're ready to take it to the end, right? If not, you get your capital tied. Now you have people saying, "Oh, young men should invest in real estate." Of course, they can only do that through REITs, and that's REITs, Real Estate Investment Trust. That's the only way they can come in. Else, they get in and they get their capital tied and can't go out again. So once you get your capital tied, you look at your 10 million. Oh, you look at this property. Oh, it's on Lintel level, but it's your 10 million, and you can't go beyond the Lintel level at that point. So the best way, as it stands, the best way for now for young people that wish to invest in real estate is what you said: Real Estate Investment Trust. That's the best way to come in. Or you come in with your friends, like you said, come in with your friends. But again, documentation is important, else you guys would have issues. So that's what I wanted to add.
Good point. Yeah, I agree with you, sir. Again, it doesn't have to be young people. It's just a way for you to get exposure and diversification at a low price is to patronize REITs, mortgage-backed securities. So it's not just, if you want to get into the property market, you don't have enough funds, consider the fractional or the REIT space. That's very, very important. I got your hand up. So, gentlemen, LV teach.
LV. You can just say LV.
LV said I was wrong on HELOC. What's going on, bro?
So yeah, like when you said that, folks outside the country can refinance their properties, take out the equity from the refinance, bring it to Nigeria, invest in property development or real estate in Nigeria, and then take out the proceeds from those investments. You're partially correct. While that happens, it's not really the case in the real world, because Nigerian market faces a high level of volatility, right? So if, let's say, for example, I have a couple of transactions, right, that I did 2 years ago. We did a transaction in Naira. Everything. Now the person is trying to pay me back, and they're trying to pay me back the exact amount that I invested with the agreed interest. In view of the market volatility and currency fluctuation in Nigeria, I am taking a huge loss on that investment. So sometimes when people, do something like that, they refinance a property, let's say in a PCC in the United States, they convert it to Naira or they bring the dollar, they invest it in Nigeria, and they try to take it out. When it's now time to take it out, they are seeing that you would have been better off leaving that money in a market that the returns are at least stable, even if it's less, even if it's 5%. That 5%, say when it's time, it's your 5%, right? So that is one of the big challenges that I have personally faced when it comes to doing business in Nigeria. The other one, because I have a couple of real estate properties in Nigeria. The second one that I've seen is the fraud risk. A lot of fraud, government policies, haphazard policies. If it's not fraud in cahoots with those issuing the land properties, the COO and all of that, it is maybe 10 years down the line, of which something I'm facing now, a property that I had years ago, Jerry Ketchup. Years down the line, the government is trying to reclaim those properties, even though it has been purchased legally. And what is even worse, the slap on the face is, let's say we bought those properties, 5 times 6, that's 30 million way back there, right? So 6 units of land sitting on like 3 to 4 plots of land. So the government is saying, okay, we're going to pay you back what you paid for those properties, but we want to reclaim those properties. So if someone is paying 30 million for a property of which you legally own, based on the current
and laws of the country. The government can claim that at any point in time. And that answers your question as to why a lot of people will rather just buy land and resell than to commit when it comes to development. So a lot of people, ordinarily, if you develop a property and you lease it or you rent it or whatever, it yields the most return.
Yeah, but you are just raising the issues or the risks around what I've said. You haven't really said it's not going to work. What I'm saying is very, very easy, right? Nigerian assets today, you can call them underpriced. US property today is overpriced, especially Canadian property. Canadian property today is overpriced. So what if I own a home in Canada and I have equity on that home in Canada? It is possible for me to take out a HELOC, a home equity loan, which means I borrow on the equity of that property for 30 years in Canada or United States. $100,000. I can bring $100,000 to Nigeria. I can do a buy and sell. I'm not renting. I'm buying an asset to sell the asset to make my money. If I make my money, I'm arguing that it is possible that the return, I can actually go back either to the black market and get dollars that I can hold and ship out on my own to pay that HELOC I've taken in Canada or America. That's the point I'm making. Are there risks? Yes, which is what you've stated out. There's corruption, there's volatility, there's currency, there's yes, but it doesn't change what I've said. It's up to you if you want to take that risk. It's up to you if you want to take it.
In that case, I 110% agree with you. But I was just looking at the way, the way you said it. I kind of got the impression like, oh, you oversimplified the transaction without taking account of the risk that
I know folks that have done this exact transaction I'm telling you about. I know folks that have done it in Lekki over and over, and I know folks that have done it specifically. What I'm saying, they take a HELOC in the UK, they come to Nigeria, they build townhouses, they sell the townhouses, not to rent, they sell the townhouses, which is double. They invest 50 million, they sell it for 100 million. The 50 million is enough to cover the currency devaluation. I know many folks that have done it, and they take money back in bulk and they go. Many folks have done it. So I'm not saying you should go and do it. I'm just saying that this is what I know people are doing. The landmark guy is from, he's a Nigerian, right? But where is he from? He's from the UK. The landmark guy is from the UK. He's a Nigerian guy. He went to University of Nigeria. But he's, he got his yeah, he's got his capital from there, and he came and he's doing so. You have to be smart. In Nigeria, there are lots of opportunities in the crisis. This is why when people say I made a return of 100%, if there is no risk, there is no return. It doesn't mean risk is return. But if there is no risk, there is no return. So people say high risk, high return. That's the false statement. High risk does not translate to high returns. But if there is no risk, no volatility, there can be no return, because that return you're making is the quote unquote. That's the return. Nigeria is a difficult place to do business. That's why the returns are so high. That's why. It's because it's so difficult to do business. If you go to North Korea and you bring in mobile phones, then you sell a lot. But Kim Jong-un can arrest you tomorrow. That's the risk, right? Guys, let me shut down the space on the recording, then we can we'll come back real quick and just stay here. All right, folks, thank you so much for hanging out with us on our real estate topic. We're talking about Nigerian real estate, the risks, the opportunities, lots of real life examples here that people have said about how to invest in Abuja, in Lagos. We've gone everywhere. Hold up, we've gone everywhere on this, right? So now we just want to say, hey, all we do here is education. We're not giving you an offer to buy or to sell, but we are basically giving you education so that you can take the best decision yourself where to invest. Do your due diligence, ask for paperwork, involve professionals, your lawyers, your quantity surveyors, get them involved before you invest in real estate in Nigeria. And remember, there's a currency crisis. If you bring your money into Nigeria from a different currency, be aware you may not be able to take the money out according to your own plan. So plan and have your redundancies and your, should we say, plan B in case what you do goes out of sync. It's a tough world out there, but it's also a promising world out there, guys. So thanks for tuning in. I appreciate you